Good day, everyone. Welcome to the third day of the Africa Accelerating 2021. This is a call to order. Before we commence, we would like to acknowledge the land for Toronto. We acknowledge the land we are meeting on is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat people, and is now home to many diverse First Nation, Inuit, and Métis people. We also acknowledge that Toronto is covered by Treaty 13 with the Mississaugas of the Credit. Thank you.
Thank you so much, Sam. And an absolute pleasure to be with each one of you this morning and to all across the African continent this afternoon. As you can see, it's a beautiful sunny day in Toronto. We're on the top floor of the Dominion Centre, coming live from one of the great financial capitals of the world. And today's key subject matter is that crucial question of unlocking the hundreds of billions that exist in financial markets, but particularly pension funds and private equity. And we'll be getting to that later today. But under the theme of the African Continental Free Trade Agreement, a historic agreement, the largest in the world, and of course, one that stands to yield enormous potential under the title of today, Day 3, the Global Growth Engine. It's my great pleasure, Your Excellencies, honorable members and other dignitaries, as well as business leaders, to acknowledge those as well joining us in the audience once again on this third day of our 2021 summit. Dr. Makesha of Ivanhoe Mines, Mr. Spio Gabra, our special envoy to the African Continental Free Trade Area Secretariat in Ghana, as well as leaders of the board, members of the McCarthy Tetra team, and others who've joined us, our leading sponsors. Once again, I'd like to acknowledge 6, B2 Gold, McCarthy Tetra, EDC, Hatch, Mine Africa, Ethiopian Airlines, Dundee Precious Metals, Growth Strategy or Senko, Process Research Ortec, and of course, Global Affairs Canada. We've got the great honor of Director General Tariq Khan addressing us a little later today during a keynote that's going to kick off a very exciting panel around the legislative frameworks for enabling the massive growth potential that we have before us. I'd also like to take time to acknowledge everyone working on the back end of this conference to date and for your tireless efforts, the volunteers and the attendees, your engagements, your questions, and a lot of the insights have certainly been absolutely phenomenal and are going to inform the many dozens of programs happening in the months ahead. It is my great pleasure now to welcome somebody who has been well known to all here in Canada and certainly very well known across the continent to heads of state, business leaders, and to those investors considering the continent. And that is Mr. Sebastian Spio Gabra, our esteemed chair of the board. He has the distinct honor today of calling upon Dr. Patricia Makesha, a new board director of the Chamber, who will be joining us at the front shortly for the welcome of the keynote speaker, His Excellency Wamkele Mene, the Secretary General to the AFCTFA. Mr. Chair, you have been an incredible leader. You're on the ground now. You've built our operations in Ottawa. You've expanded on what we had in Toronto. And now you're on the ground of the African continent leading that expansion. It is my great pleasure to welcome you and to thank you for your immense leadership. Mr. Gabra.
Thank you so much. Good morning, Your Excellencies, ladies and gentlemen. Good morning from Toronto. Good afternoon to those of you watching us from many parts of Africa. Thank you so much for joining us for this final day of the conference. It is really a very high privilege and a wonderful honor to ask Dr. Patricia Makesha, Executive Vice President, Sustainability and Special Projects at Ivanhoe Mining, to come and introduce His Excellency Wamkele Mene, the Secretary General of the Africa Continental Free Trade Area. Dr. Makesha is someone who, without doubt, when we think of the last few decades of the story of Africa, in a certain sense, when we say Africa is accelerating, when we say Africa is moving forward despite all the challenges, that movement is not one that is cosmic. It's one that is practical in the sense that it takes several great men and women working together in different fields, some in business, some in finance, some in education, in mining, in different areas to move Africa forward. And there is no doubt in anyone's mind who has encountered Dr. Patricia Makesha that she is indeed one of those great daughters of Africa who has walked in such a way that she has left her footprints really in the sands of time, so that those who are coming behind her are able to look at her big shoes and also try to fill it. She joined Ivanhoe's South African subsidiary, Ivan Platts, as managing director in September 2014, and she has overseen the development of relationships and the diverse communities in the vicinity of the Plantref mine in South Africa, and she manages project relations with a broad group of stakeholders. Patricia has served on the boards of GlaxoSmithKline, Rand Water Board, Trans-Caledon Tunnel Authority, the Construction Industry Development Bank, the South African Broadcasting Corporation, and the Cooperative Development Bank Agency. She was the founder and chief executive of MMS Consulting, and other careers. So the important points over the course of a 25-year career have included a senior executive of transformation and human capital at a South African forestry company, group corporate manager with Global Forest Products, manager of marketing and communications at the South African banker ABSA, and a journalist with the South Africa Broadcast Corporation. Dr. Makesha holds a doctorate and master's degree in business administration from MU Business School and has completed several executive programs at Harvard, University of Cape Town, and Wits Business School. In short, over the last few days, as we have had conversations and discussed so many topics looking at the future of Africa, it is without doubt in my mind that when the story of South Africa is written, when the story of Africa is written, the story of Patricia and many others like her, strong African women who have not used their strength to toot their own horn, but have used it to assist their communities, would be one which everyone would remember. So it gives me a great honor to call the newest director to join the Canada-Africa Chamber of Business, and around here we call her Big Sister Pat, to introduce His Excellency Wamkele Mene. Thank you so much.
Thank you so much, Brother Sebastian. Good morning to those in Canada. Good afternoon to those at home in Africa. And good evening to those in other parts of the world. It gives me a great pleasure to introduce a brother of mine from my home country, South Africa, Mr. Wamkele Mene, who is the Secretary General of the African Continental Free Trade Area. He was elected in February 2020 as the first Secretary General of the African Continental Free Trade Area Secretariat. He was born in Uitenhage, Eastern Cape Province in South Africa. He attended Marymount High School and Trinity High School. He holds BA Law degree from Rhodes University and MA in International Studies and Diplomacy from the School of Oriental and African Studies, as well as LLM in Banking Law and Financial Regulation from the London School of Economics and Political Science. Prior to his appointment as a Secretary General of the African Continental Free Trade Area Secretariat, he was the head of mission to the World Trade Organization for South Africa and the Chief Director for African Economic Relations in South African Department of Trade and Industry, and South Africa's lead negotiator in the African Continental Free Trade Agreement. The Canada-Africa Chamber of Business has been privileged to welcome His Excellency Mene on several occasions and is proud of Canada's role in the African Continental Free Trade Agreement, as well as recent commitment made by the Prime Minister and the business community in Canada, following our extensive engagement in an organization. It is our distinct pleasure to welcome the leader behind the world's largest trade measured by the number of countries participating potentially. Over to you, my brother. We welcome you.
Thank you for inviting me to participate in this year's conference, Canada-Africa Chamber of Business Conference, which comes at a very, very critical time as we implement the African Continental Free Trade Area and as we are nearing the end of the first year of trading under the AFCFTA. It's a pleasure for me to share with you our vision and our objectives in terms of trade and investment relations between Canada and the AFCFTA market. Let me start by congratulating the Canada-Africa Business Forum for convening this meeting, of course, at a very, very difficult time occasioned by COVID-19. But nonetheless, I congratulate you for being able to convene what I hope will be a very, very successful conference. As you know, Canada's commercial engagement with Africa has increased over the past 2 decades. Canada more than tripled her exports to Africa from $1 billion in 2001 to just over $3 billion in the year 2018. In 2019, there was about $10.5 billion in Canadian direct investment in the African continent and almost $40 billion in mining assets. In 2020, Canada had $11.5 billion in two-way merchandise trade with African countries. The potential, however, exists for a more robust partnership that brings more trade and investment to spur sustainable and inclusive development in Africa, while at the same time contributing to Canada's economic growth. Today, we have a platform to enhance this trade and investment relationship. The African Continental Free Trade Area has the potential to deepen trade and investment relations and cooperation between Canada and many African countries. And I'm pleased that this session, this 3-day conference, will focus on exploring Canada-African Union collaboration, free trade, and partnerships with institutional investors. Ladies and gentlemen, as I mentioned earlier, since the 1st of January this year, it became possible for state parties whose customs procedures are ready to trade under the AFCFTA. We currently have 42 countries that have ratified the agreement establishing the AFCFTA. This signals a very, very strong commitment to reduction of barriers of intra-Africa trade, reduction of barriers to investment, intra-Africa investment, and it signals a strong commitment to adhere to the single set of rules for trade and investment on the African continent. As you may well be aware, Africa is a big continent, 3 times the area of China, 3 times the area of Europe, and 3 times the area of the United States of America. If Africa were one economy, a consolidated economy, with its combined GDP of 3.4 trillion United States dollars, which is projected by the year 2035 to be almost 7 trillion United States dollars, Africa would be the 5th largest economy in the world after the US, China, Japan, and Germany. Our continent is a big market, but a very fragmented market. Almost half of the 55 countries have populations of under 10 million people. Trade is obstructed by over 100 unique land borders between countries and further hampered and obstructed by diverse rules that constrain investment and cross-border trade in different areas of Africa's economy, including the services sector. If we're to boost intra-Africa trade, if we're to scale up services sector investment, we need to accelerate the reduction of barriers to trade in Africa, regulatory barriers, tariff barriers, and investment barriers. This is what the AfCFTA is all about. By consolidating Africa into one trade area, providing a platform where businesses and investors can make a contribution to Africa's economic development, whilst at the same time creating opportunities for Canadian investors to invest in Africa, we believe that the AfCFTA is the right platform precisely for that. A large and attractive market with reduced barriers to trade, investment, enables investors to undertake larger revenue projects on a continental rather than a national scale. The AfCFTA therefore offers an appropriate response to the reluctance of investors to invest in small, fragmented, and uncompetitive national markets. We now present you with an opportunity to invest in a consolidated market of 1.3 billion people with a combined GDP of 3.4 trillion United States dollars. In addition to our commitment to reduce barriers to trade in goods and to ensure harmonization of customs procedures, we are also committed to reducing regulatory barriers in the area of services trade, as well as establishing a common set of rules on digital trade, intellectual property rights, competition policy, as well as creating opportunities through the protocol of women and youth in trade, creating opportunities for segments of society that often are left behind by trade agreements. The protocol on dispute settlement enhances the value proposition of investment in Africa. Through the operationalization of the protocol on dispute settlement in April 2020, Africa signaled readiness to be bound by trade and investment rules and obligations that state parties to the AfCFTA themselves negotiated. Africa is committed to open business, open trade, based on a single set of rules, and that is to say, the AfCFTA agreement itself, and presentation of a dispute settlement mechanism through the operationalization of the dispute settlement body. The AfCFTA is complemented by other continental economic instruments, and these include the Single African Air Transport Market, which seeks to further liberalize skies, a program for infrastructure development in Africa, amongst other economic development initiatives. It is being implemented along these initiatives to address Africa's developmental challenges and realize better economic benefits for the entire continent. Ladies and gentlemen, while Africa, as other continents in the world, have been severely impacted by the COVID-19 pandemic, it is well placed now than ever before to rebound better and stronger and achieve the economic transformation and development desired for the Africa that we want. And therefore, notwithstanding the challenges and setbacks of COVID-19, we believe that the AfCFTA, where it is aggressively implemented, positions Africa for further growth in the year 2022 onwards. Today, the case for investing in Africa is stronger than ever. Africa will remain a competitive investment destination for decades to come because of its improving relative risk profiles, demography, and continental integration initiatives. The AfCFTA has the potential to significantly improve ease of doing business in Africa through harmonization of various rules across Africa's economy. Having witnessed its worst recession in over 25 years in 2020, when GDP declined by 2.1%, Africa's economy is forecast to register an encouraging growth of 3.4% and 4.5% in 2021 and 2022, respectively. Indeed, countries across the continent are taking policy actions to create an environment in which businesses can thrive, adopting macroeconomic and industrial policies that are essential for a stable macroeconomic environment that avoids and smooths out volatility in prices, sharp deteriorations in the current account and budget deficits, and rapid accumulation in debt burdens. As we have already seen, and based on the growth forecasts for this year and next year, these various continental policy actions at national level are beginning to yield positive results. The UN predicts that by the year 2050, there will be 2.5 billion Africans, 1/4 of the global population, and the youngest population in the world. Africa is expected to be the world's fastest urbanizing region, and by the year 2045, it will have a larger urban population, larger than China and larger than India. The rate and scale of urbanization will be transformative and has the potential to make African consumers more connected to the global economy. These demographic changes will continue to outpace those of similar positioned economies around the world. In the coming decades, this will ensure that Africa's position as the most demographically attractive investment destination is cemented. Digital and mobile access is rapidly increasing, and thus Africa's young population is better and more connected than ever before to the global economy. According to data from GSMA Intelligence, there will be significant growth in internet and smartphone usage by the year 2025, particularly by young Africans, with the number of connected smartphones projected to increase to 690 million in 2025. Better access to the internet will enable these users to take advantage of digital trade and e-commerce platforms for goods and services. Furthermore, when investors examine whether to enter a new market, one of their first considerations is the presence of adequately sized potential partners or customers. Both are abundant in African markets. Throughout the continent, there are 400 companies with annual revenues exceeding $1 billion, with another 700 companies generating over $500 million a year. These enterprises compete in diverse sectors and are regionally and globally competitive. Significantly, the continued development and maturation of the AfCFTA market will create enormous purchasing power, providing new market space, new market opportunities for both Africa and Canadian investors and businesses. There are huge opportunities for Canadian investors in the AfCFTA market. Currently, Canada exports foodstuffs and advanced machinery to Africa and imports mostly petroleum oils, precious stones, and agricultural products. And in recent years, while the growth in exports has slowed, the value of imports has declined along with oil prices. I therefore urge Canada to reorientate her economic relations and trade outlook more towards the African continent. In this regard, while petroleum oils, gas, and mining will continue to be important for Africa, there are new opportunities to be explored within the AfCFTA context, including in the areas of renewable energy, infrastructure development, ICT, agriculture, processed agriculture, as well as the services sector. Of course, to qualify for preferences and benefits of the AfCFTA market, Canadian investors will have to ensure that their production involves sufficient transformation or value addition in the state party of the AfCFTA. Canadian-based businesses will also benefit from the AFCFTA by partnering with African businesses and contributing inputs, intermediate goods, and supportive services, and by ensuring that sufficient value addition or transformation occurs within an AFCFTA state party, Canadian investors stand to benefit. With the AFCFTA, our continent, Africa, is poised for a major economic transformation, a structural economic transformation, in line with the aspirations of the African Union's Agenda 2063, the Africa we want, an integrated, prosperous, and peaceful continent. I would like to invite you, therefore, to take advantage of the investment opportunities in Africa and to partner with us in the implementation of the AFCFTA. I wish all of us very, very good deliberations in the next 2 days, and I look forward to working with you to enhance trade and investment relations on the African continent. I thank you.
Your Excellency, Wamkele Mene, thank you so much, Secretary General. Your leadership on the African Union file, specifically this historic trade agreement and its consequences, not just for the globe as a whole, but of course for Africa's development and that of all its people, is commended. And we thank you. We thank you too for the relationship through the working group discussions and other conversations that have taken place since your accession to this vitally important role. And further to that, as a chamber, we are absolutely committed and pleased to advance and to support in any way we can the important work that you do from the vantage point of the diaspora and others around Canada who are so committed to seeing the economic development bonds between this country of Canada and with African markets. It is by great honor as well to acknowledge the important role of various ministers from Canada, leaders from across the political aisle, who on this issue, as has been seen in the manifestos following the engagements of the chair and I, various platforms of political parties here, as well as of business associations, have acknowledged this common point of an African future that is grounded in the vision and the work toward a single market. And I think it would be remiss not to acknowledge the central role that Canada played on invitation as a trusted partner in the development of this agreement to which each member state of the African Union has signed on, and which, as you noted, Your Excellency, took effect this year, a historic date, the 1st of January 2021. Well, it is my great pleasure to furthermore go to a panel discussion, and it's really a conversation more so than the traditional panel. In a moment, we'll be crossing over to our stage right here in Toronto, where Dr. Patricia Mukesha, new director at the Canada-Africa Chamber of Business, is also joined by our outgoing chair of the board and our newly inaugurated special envoy to the Continental Free Trade Agreement, Mr. Sebastian Spier-Gabra. We're going to be discussing some of the key issues around leadership, be it business leadership, private sector leadership, and certainly acknowledging the incredible work of Dr. Mukesha, what leadership means and how it leads to a situation where you can have a company and operations as significant, as vast, and as important as those of Ivanhoe on the African continent. We noted on day one, as we tackled sustainability, that a key part of working toward that net zero carbon emissions future is the vital role of copper, among other commodities. And of course, those operations are being needed out of the African continent. And that leadership has been absolutely vital as part of the global economic sustainability agenda. I'd also like to acknowledge at this particular point those who are joining us from parliaments, both in Africa and across Canada. I know some members are in Ottawa, others are joining us from their constituencies. A few have sent us messages. We thank you for your comments. A few have sent us videos. We've also got a video from a Minister of Trade on the continent, the Minister of Trade for Malawi. So as we go through the program today, we'll be sharing those at different intervals. We are, of course, here to accelerate trade and investment through world-class networking and information sharing events. And that is exactly what we seek to do as we come together with a common mission and a common agenda across various divides, differences of opinion, differences of background, and work towards the incredible vision. And we support the leadership, and we thank the leaders who've got us to where we are today. It has got exactly 9:30 here in Toronto. It's 3:30 across various markets in the continent. And of course, depending where you are, give or take an hour. We're pleased to welcome you now to our first conversation for the day. I've got Dr. Patricia Mukesha and Mr. Sebastian Spier-Gabra with us, and it is my great pleasure to have the screen focus on these two illustrious individuals. As I start with Dr. Mukesha on a first question that has come through around resources, around building teams that are skilled, around how you build foundations for companies that last into the future and that endure the whims, the ups, the downs of the market and the challenges that may arise from policies. Dr. Mukesha, any initial thoughts on what is foundational to not only what you've achieved to date, but the vision to which you're working hard as a leader, executive vice president of a great company like Ivanhoe Mines?
Thank you, Brother Gareth. And it is a pleasure really to have this dialogue, because leadership is one fundamental issue that most of us, we find ourselves having to deal with diverse kind of audience, diverse kind of people. And I think the foundation, the resource perspective, talks to two things. It talks about the employees, your staff, and it talks about the skills that they possess. And I'd like to make an example. You can have the best workforce in the world, but if the environment is not conducive enough to enable them to do what they need to do, then you won't achieve your objective. The same as having the best state-of-the-art technology, but nobody knows how to use it. It defeats the purpose. And whether it's private sector or whether it's public sector, the foundation that builds business is the resource perspective. Without that, you won't be able to take off. It's almost like building a house. If your foundation is weak, it's likely to fall. So it is on that note that the two has to balance. You cannot have one and give in one. So you need to have both to make sure that it works. Thank you, Gareth.
Thank you so much, Dr. Mukesha. Mr. Chair of the Board, obviously you've been watching, consulting, analyzing, speaking to leaders across the board, but you have a particularly interesting relationship with Dr. Mukesha because as leader of the chamber at a board level, you know that the successful appointment of Dr. Mukesha to the board has been successful and reported widely. What are some of the observations of leadership from people like Dr. Mukesha and others that we're seeing in the chamber that give you such optimism on the future of the Canada-Africa relationship? And what do you see as the key to leadership that ensures that we see Canadian firms or Canada-Africa partnerships truly succeeding on an incredible continent like the African continent?
Yeah, thank you so much, Gareth. I think in a certain sense, if one is to reflect on the larger topic of leadership in a way, I would say that leadership is really, in a certain sense, how to achieve an objective or a vision with limited resources and constraints. Because at the end of the day, there's only 24 hours in a day. So whether you're trying to build a mine or you're trying to put the Africa Continental Free Trade together, or you're trying to lead a family, or you're trying to run an organization such as ours, there's always going to be a capacity constraint. You want to do X, but you have only so much time. You have only so much money. You have only so many individuals to do X or Y. And I think that the greatest leaders are those who figure out how to manage the variables and the stakeholders within that capacity constraint to achieve something. So when we look at history and you say, oh, this was a great general, why do we say he or she was a great general? He or she was a great general because despite certain constraints, they mobilized their troops, they mobilized their logistical resources to achieve an objective. When we say that, like Patricia, her sister Pat, the great work you've done at Ivanhoe and Ivan Platts, when we look at it, I think in a certain sense, from the outside, it looks like, wow, that is a beautiful company, that's a beautiful skyscraper. But it's those who have built it who can tell you how difficult it was to build it in spite of the capacity constraints. So in a certain sense, guys, I think that when someone even looks at the chamber, right now we have hundreds of people watching us from all over the world. They are the beneficiaries of leadership because somebody had to plan all of this. Somebody had to get a digital platform to work. Somebody had to find a venue. Somebody had to orchestrate all the participants to come. Somebody had to come up with the titles, the topics, etc., etc. So, in a certain sense, I think leadership is actually, the definition is quite straightforward, and that all of us in each of our lives have to deal with that every day. We want to achieve something, and we don't have enough capacity. We don't have enough money. So I think that because the reason this topic is extremely important is that in Africa, oftentimes you hear leaders say, "Oh, we want to have water in every community, but there's not enough money. We want to have good schools, but we don't have enough teachers." But that is precisely why you're a leader. You have to figure out how, with 6 teachers, you are going to educate 1,000 people. Precisely how, with just $10,000, you are going to drill 100 wells. That is the essence of leadership. So I think that whenever we look at a great leader, oftentimes there's a lot we don't see. And what we don't see is the sacrifices, the ability to call people to their higher selves. I believe very much that, and this is I'll make this comment and defer back to my big sister here. I believe very much that the foundation of leadership is, in a certain sense, appealing to the inspirational hope in an individual. So you are crossing a river, you're a general crossing a river with very little logistics. You have to appeal to your troops to believe that when they cross this river, they are going to change something. So in a certain sense, I think leadership is really just bringing limited resources and limited capacity to still achieve an objective.
Thank you so much, Mr. Chair. Dr. Bekesha, that limited resource component is one that you no doubt address every day. You've got stakeholder perspectives that you bring together. You're working toward a bigger picture, but you've got investor considerations, fiduciary duties, governments, policymakers. Relationships are obviously key. I know you're almost every day you're in a different capital on the African continent. What has been integral in your experience to bring all of these different groupings into one single grouping to the point where now you have one of the single biggest minds in the world on productions of any given commodity?
It starts with a vision, Ivanhoe Mines is very fortunate that we have visionary leaders, We are very entrepreneurial. We don't have red tapes that holds us back, We are in a position where, as a collective, as executive, we are able to make decisions around 24 hours. So I will say a great leader will share the vision with all the followers, because there's no point in knowing what you wish to achieve if people who are going to implement are not seeing the bigger picture. And I'll make an example in our continent, which I won't mention the country. I know of a great leader, a great president who was a visionary, who knew exactly what he wanted to achieve. I remember talking to him and he themed his Vision 2024, which was very inspiring, And it was a master plan. It was going to change lives. It was going to impact people. It was going to create jobs. We are going to see a classic case study of women empowerment and youth development at its best. But that plan will never materialize because, unfortunately, he was unable to share the dream and the plan with people who are going to benefit and make it work. So the people lost faith and thought, we're going to be poor for the rest of our lives. We don't see a vision, so we need another leader. So if you're a leader, you need to be able to translate your vision to your followers so that they can implement it and vision can be turned into action. Secondly, the internal business processes, again, whether it's a company, whether it's government, any institution needs to make sure that the left hand knows what the right hand is doing. Because if there's no communication between everybody that is involved, you'll deal with silo mentality. You'll deal with people who are doing their own things in their own space without actually integrating and synergizing their effort. That is critical. And we're still talking about the internal environment here. We haven't gone to the external environment. Now moving forward to the stakeholder perspective. I always say to the workforce in Ivanhoe Mines, you're all the ambassadors of this organization. When you look at Toronto Stock Exchange, when you look at our share price, when the share price goes down, it's easy to look around and say, did our ambassadors actually give a positive narrative in terms of what we are trying to do? I'll make an example of Mokopane, where Blood Reef Mine is. If you have a workforce coming from your villages in the communities, and they get into a public transport, a taxi, 16 of them, and one person says, I hate my work environment, everybody in that public transport, in a taxi, is going to have a perception of Ivan Place is not a good company. By the time the 16 people reaches their respective homes, they're going to be translating that message of that organization is not good. So your workforce, your internal workforce are your ambassador. They're your first point of entry. And that internal business process arrangement is very critical. They need to own the process. They don't have to wake up in the morning and feel like, oh, I'm going to work because I need to pay bills. No, that is not work. That is paying of bills. You need to encourage a culture where people feel I'm waking up in the morning because there's a bigger picture. The platinum that we are striving to produce is actually going to make sure that we have cleaner air in terms of fuel cells. There must be something bigger than just waking up in the morning, going to work. There must be impact. So a leader should be able to translate that. And whether you're a cleaner in the organization or you're a general manager, you have to share the same vision. And I want to say, when I was studying MBA, I had a case study of having to study 30 companies and find out which company is best in terms of really translating their vision. And I sent questionnaires to the CEOs. Some responded, some didn't respond. And I decided I'm going to walk to these organizations and I'm going to have the first-hand experience and see how it's going to work. And to date, I'm still impressed by how Microsoft was able to talk about their vision. I walked into their boardroom. A person was making tea, asked me, can I serve you coffee? I said, yes. And I asked her, what is the vision of this company? Deliberately so, because I needed to test to see if indeed whoever I'm going to meet with, did they communicate the same message to the workforce? And she looked at me and she spoke to me in Zulu. And that was years ago. And she said to me, is to put a PC in each and every household. And if somebody who's actually making tea understands the vision of the company that she's working for, it gives you hope. And by making that example, I want to talk about Africa as a continent. If we all understand where we want to take our continent, if we all share the same vision and we stop saying, oh, we are in South Africa, and when you go to Angola, I'm going to Africa. No, you're not going to Africa. You're already in Africa, okay? So we need to start really seeing ourselves as Africans before anything else. And then we'll be proud in terms of what we do and taking it forward. But that's not going to happen overnight. There's a lot of work that needs to be done. And I'd like to pause there.
Thank you so much, Dr. Makesha. And a quick follow-up question and the same, well, in fact, as long as answer as is needed, because it's quite loaded, and I invite the chair to add his insights as well. But where do you draw the line when the wheels go off? How do you actually then overcome those real challenges as they arrive? I would assume that the vision, once it's in place, has a key role in energizing and motivating. But what are some of the practical actions you've taken amidst some of the most challenging of circumstances, and the companies continue to grow and to thrive? Any insights there that you would share with us?
Yes, definitely. Corporate governance, when I started, I spoke about the resource perspective being the foundation. Obviously, the internal processes are the walls that holds it. And your corporate governance, it covers everything. It's your roof of this house that you're building. Most people tend to think from a corporate governance point of view is only from the financial perspective. It's not just about dollars. It's not about rands and cents. It's not about euros or pounds. It really is about the way you do business. It shouldn't be a compliance issue of ticking the box. I remember when I arrived at Platrief in 2014 as the MD, somebody asked me, so how are you going to make sure that we comply and we become a level 3 BE compliance? I said, no, I'm not going to make sure that we become level 3 BE compliance. I'm going to make sure that our way of doing business is so correct that it takes us there, because it shouldn't be about transformation from compliance point of view. It should be about way of life. So there's a very thin line when it comes to ethical leadership, and I always say people need to pause and reflect in order to move forward, because you get so intertwined in what is happening every day in your life. You become part of the furniture. You don't see a crack on the wall when you walk into a boardroom anymore. And you always have to put those glasses to say, yes, I'm part of the solution, but can I take a step back and ask myself, if I was in this position, how will I make a decision? I'll make a practical case study. If you look at the South African context from a mining point of view, you have what we call localization, where you have to make sure that the footprint community where you operate becomes the shareholders. Platrief as an entity is among 20 villages in Mokopane. The 150,000 households actually hold 26% shares in the organization. And when you sit in the boardroom, you have to ask yourself, everybody has hope that one day we're going to see this biggest platinum mine in the world. How do I share that vision that, firstly, we all know about the platinum price being below 1,000. How am I going to say copper is the best commodity compared to platinum? How do I talk about this message and still give people hope that we are still on the right track? So from a corporate governance point of view, it's important that you take your stakeholders along with you. If there are challenges, there must be the first point of entry to know that we have these challenges. We invite you to give your input. How are we going to resolve it together? Each and every relationship is about communication, whether be it family issues, whether be it business, whether be it government. If you don't communicate and if you don't share that communication, you open yourself up to misunderstanding. And governance, really, for it to work, policies needs to be in place, procedures needs to be in place. And people tend to differentiate and confuse policies and procedures and think, well, I can hide behind these processes and not deliver at the end of the day. You see a lot of organizations, particularly when it comes to public sector, the institutions, where talk is there, but talk is cheap if you cannot actually put actions to what you are saying. We all want to see the better Africa. We all want to see Vision 2030 being implemented. But what are the action steps that we are doing? Where are the milestones? How are we going to get there? You can say you want to move from Cape to Cairo, but you need to know how you're going to get there. Are you going to hike? Are you going to fly? How long is it going to take you? When are you going to arrive there? And when you arrive there, what is the intention when you get to that destination? So corporate governance plays a critical role, and it's not only financial, it's how we do business, our way of doing business. Thank you, Gareth.
Thank you, Dr. Makesha. And Mr. Chair, coming over to you, many know you, of course, in your capacity here as chair of the board and the growth of the chamber, but you also have another extensive life and career advising on, in the billions of dollars on major transactions. When you've seen the wheels come off there, what are some of the key aspects of leaders that have been able to pull through and really succeed on the continent? Because not everyone does, but for those who do, it is phenomenal. If you just share a little bit about that, and particularly the point on resilience, who is, any examples of resilience you wish to share would be fantastic.
Thank you. I think in a certain sense, a leader has to almost assume that one wheel will come off. It would be impossible to drive from, Cape Town to Cairo and not blow up a tire, right? So actually, going back to Big Sister Pat's point, you actually deciding that I'm going to drive from Cape Town to Cairo, you have to assume that there'll be a problem along the way, probably with one of the tires. And so you would have to have some spare tires in the back of the car. It's not when you're in the middle of, the forest in Congo or in Sudan, then you'll say, oh my God, the tire has blown up. What do we do? So we should assume, for instance, that when we are going to put this conference together, there will be challenges. I remember a few days ago, one of our colleagues here lost his laptop, but that is a challenge that can happen. We should assume that some planes would be delayed. We should assume, so in a certain sense, my sense of great leaders is that great leaders already assume when they are going to war that a few people will die. They sort of know that. It will be almost naive to go to a war and not plan for a few people dying, so to speak. So when the wheels have come off, I think one should anticipate some wheels would come off. Two, when it comes off, you would have to stop and communicate that, as Dr. Makesha said, to your stakeholders. We want to develop a mine. We assumed the price of copper or the price of platinum or the price of gold would be X in our business plan. There's something has happened in the global economy. It is now X minus 200, or it's now X divided by 30, whatever the change in the variable is. This is what it means for all of us. It means that maybe a mine that we have to build next year may not happen for another 3 years, or it may happen actually this winter, not next year, because the prices have changed. And because of those changes, this is what each and every one of us is supposed to do. We are all supposed to cut our salaries, or we are all supposed to do X or Y. So I think in a certain sense, great leaders should anticipate that there will be challenges. Great leaders, when the challenges occur, should pause and explain what that challenge is to their stakeholders and to their colleagues and beneficiaries. And then inspirational leadership should lead in the sacrifices that are necessary. You cannot say, we are driving from Cape Town to Cairo. The tire blew up, but friends, family, I am taking a helicopter to Cairo. Why don't you guys stay here in South Sudan and figure out how to solve this problem? That is not a great leader. A great leader should be able to be seen by the stakeholders as also being part of the struggle to resolve the problem. And I think when you do it that way, your whether it's a family, whether it's a business, if I say, for instance, that we want to move, as you know, in the board and from your own visionary leadership, Mr. Bloor, that we want to take this organization as the Canada Africa Chamber from Toronto to the rest of Canada. Somebody has to actually move from Toronto to the rest of Canada. We cannot sit in Toronto and say, well, we want to be in Vancouver, but somebody actually has to pack their bags and go to Vancouver. And so that then inspires the next person to also move to Calgary. So in a certain sense, I believe very much in a leader who not only inspires, but who also joins with the sacrifices. And I think that in many African countries, in all my travels, and you're talking about my private work, I've had the privilege of traveling to so many African countries. And I would say that the people of Africa, by and large, are waiting for that type of leadership. They want to see a minister of water resources who says, I am also going to drink the same water that I'm trying to drill, as opposed to I'm importing water from Switzerland, but you drink water from the well here.
Excellent, Mr. Chair. Thanks very much. Dr. Makesha, the issue of responding to challenges, I think, has been dealt with. A lot of great feedback coming through. A question, though, on mitigation and internal business controls and processes. Could you share some of the aspects of that you lead in your company, and also the issues raised by Sebastian around how much leadership and example and indeed sacrifice is a factor in those internal control processes, the fact that they're not all technical. Thank you.
Thank you, Gareth. I think the business schools taught us that this is how work environment should be. But what they've missed is there's a people perspective in everything that we do. And human beings are not machines. Mm-hmm. Human beings have feelings, and you need to take that into consideration as a leader. I remember somebody asking me, why are you leaving the office at 11 o'clock at night? You should be able to do your work from 9 to 5. I said, that is not possible, because if you are a leader, you should be able to make time to hear the pulse of the organization. And for you to hear the pulse of the organization, you should make time to touch base with different people within the organization. And again, going back to when I arrived in the mining sector, I've had the pleasure of working with some of the most open-minded people. And we came up with a policy that in our organization, we're not going to call each other by employee numbers. There's no employee number 1011. We have names, and we're going to know each other's name. And when I walk down the corridor, and everybody here, oh, Pat is coming because I'm the late arrival. I come to work when everybody's now seated having their coffee. When I walk in there, everybody starts saying, I'm coming in the next 5 minutes. And when you sit down with different individuals and they explain to you that from this department, this is the challenge that we have, it's not a management meeting, it's a one-on-one touch base to hear how things have been, because I travel most of the time. And when I go back to the office, it's time to touch base and understand what has been happening. If you don't make that time to understand the pulse and the heartbeat of the organization, you're missing a lot as a leader. Because all that you know is documentation, is your monthly report, but you don't get to the heart and soul of what is happening. And it's important because those finer details is actually what shapes the organization. It's actually what gives you an in-depth knowledge of where we are, where are we heading, how are we going there, and are the people still on the same boat, or are you now having a workforce that you have left behind, And I want to encourage one thing that I think is a good lesson for all corporates. You don't exist in isolation. And most of our competitors tend to be critical of Ivanhoe Mines to say, oh, you're involved with the AU, or you're involved with this. Why are you getting yourself into government issues? It's because you don't exist in isolation. You need to make sure that you do your part as a private sector to influence the decision-making within in which you operate, the sphere in which you operate. And starting from policies, there's so many policies across our continent in different countries. I mean, you look at the mining codes of Zambia, you look at the mining codes of Angola, of South Africa, of DRC. Everybody has different ways in terms of talking about localization. Can't we have one definition of what do we mean as our context of African localization? If we say we are going to put youth development as a priority, women empowerment as a priority, what does it take, And in most cases, I hear leaders talking about, oh, we're going to upskill our workforce. Yes, you're going to upskill them. And then what? What comes after that? So I want to go back to results-oriented kind of outcome. Yes, you do skills development. But I want to go back again to say you can do that, but don't do it only focusing on your workforce. The community in which you operate must also feel that impact. Feeling that impact doesn't mean if you're a mining house, you only have to focus on core mining functions. Diversify your skills. Make sure that the non-core are also taken care of, because not everybody is lucky to have life of a mine of 100 years. Other life of mines is 20 years, is 12 years. What happens after that? You have created a ghost town and you have left. What about the economy of that town? So what I want to say is, in our strategic thinking, we really need to be futuristic. We don't only have to think about now. The here and the now doesn't help. We need to think about long term. What kind of legacy do we want to leave behind? Whenever we have investors conference, I always say, when somebody drives on N1 in Limpopo and they look on their left and they see Platreef Mine, that will be 100 years from now. We all won't be here. They should be able to say there was a cadre of leadership. There were young men and women, diverse from all walks of life, and they've built something that we are proud of. If the vet students are doing their syndicate assignment and they were to analyze mining in the continent, they should be able to look back and say, there were mines in these countries, and we are seeing the impact of it. There was beneficiation. That is the dream that I think all African leaders should have. The broad-based impact, not for few individuals, but for everybody who can be lifted. That is critical. Thank you, Gareth.
Thank you so much. And something that you shared that many remember 2 years ago when you were with us in Toronto, Dr. Makesha, the fact that Ivanhoe is an incredible example of Canada-Africa collaboration, and you passionately speak and teach and share the African approach. But you were also very open in sharing what you've learned from Canada. And of course, Canada, its people, its companies have touched millions across the continent. We're all gathered under this auspices. Could you share any insights there on business practice and values from this country that you think really do give Ivanhoe its essence and its advantage as such a leading firm on the continent?
Definitely. Gareth, not only Ivanhoe Mines, but even in my previous career before Ivanhoe Mines, because I used to work for a Canadian company, the Global Forest Product. And there is a very distinctive, authentic leadership when it comes to Canadian business. And I always say, I was very fortunate to have 2 Canadian mentors who happen to have been my bosses that I still even keep in touch today. We've become friends for life simply because the ethical way of doing business. You know, if you were to go to a country and you want to start investment there, the most important thing is you're going to look at issues of transparency. Are they transparent enough? Can I actually trust the people that I'm dealing with, that when I have challenges, they're not going to turn their back on me, you know? And I've learned those principles from Canadian ways of doing things. Canada believes in partnership. Canada believes in empowerment, you know? And you are empowered as a Canadian leader to make decisions. You're not there because of your gender, and you're not there because of the color of your skin. You are there because you add value. And that is a critical lesson. When you're sitting in the boardroom, you'll be asked, what is your view? How do you think we should resolve this? Nobody makes decision on your behalf. Whereas in terms of other cultures, it is assumed that, yes, you are there, but we're going to help you to make this decision, you know? So Canada is different in its way of doing business, in its way of empowerment, in its way of learning, because when you're a leader, you also have to think, and Brother Sebastian spoke about this so many times when we had our one-on-one conversation, that one day you're going to be gone and there must be succession. You have to make sure that you handle what you've been doing and you hand over to somebody to continue. Sustainability point of view, because we've seen a lot of great businesses. And as soon as a leader vacates, you ask yourself, was this that great business that used to exist? You know, what happened? It's lack of sharing of knowledge. The Canadian way of doing business is about knowledge sharing. It's about empowerment. It's about trust, you know. The leaders trust you to do what's best for the organization. And the organization comes first. It's never about personalities. If you look at one of the code of ethics, we don't use the word I, we use we, because we take collective liability when we do things. We believe that when we fail as a collective. And when we win as a collective. And I still remember my former boss saying to me, you know, it's so easy to take a stick and you bend it and it will bend immediately. But when you take group of sticks and you try to bend them, they don't, because they remain solid, they stay together. And the we concept comes from that, you know. And I think that is the culture that Ivanhoe Mines has. And the moment you feel that things are not going your way, you know that you have the support structure around you to lift you, because days are not the same. There are days when everything is high and good, and there are days when things are down, and you do need that support. That's what business and leadership is all about.
Thank you so much, Dr. Makesha. And, you know, touching on a point on the role of Canada and some of the practices and the exchanges of knowledge that have taken place. Mr. Chair, we've often heard here that Canada has a red carpet on the African continent, something our Vice President, Jacques Mtumbe, often pronounces. You've been at the forefront back on the continent of making the case that Canada is a preferred partner, a trusted, honest broker in global politics and in international relations. With the edge that Canadian companies enjoy, with the positivity around brand Canada, what do you advise those business leaders from Canada to whom you're consulting? How do they utilize that edge effectively? What do they need to know about going into an incredible market like the African continent and taking with them all those positive attributes that Dr. Makesha has outlined so that their business practice, really secures that vision and enables that growth with Canada as Africa's trusted business partner going forward?
Yeah, thank you. I definitely, Canada, brand Canada is positive in Africa. It's, Canada doesn't carry with it the same complex colonial legacy that, say, France or Britain or even Germany could have in Africa. If you are a German company operating in Namibia, your relationship with Namibia will be quite complex in a way that Canada doesn't have that kind of legacy. So that's quite positive. So you would very rarely see, some huge demonstration against a Canadian company. The way that sometimes in different countries you would see political agitation against maybe a Chinese investment, for instance. But I think where the challenge has been, much like a child of a famous, successful person, we cannot just live off that brand Canada without some level of investment and coordination. So the fact that Canada has a great brand in Africa doesn't show up, for instance, in the trade statistics. When you look at the trade statistics between Canada and Africa, it's a fairly anemic number. And I think Goldie Haida mentioned this on the first day. So there's still a way in which you have to leverage that great relationship to support businesses in Canada, from Canada or in Africa. Most Canadian businesses who operate in Africa would often tell you that they sometimes don't feel the support of their government in a strong way. Sometimes they would say that they feel a bit lonely out there in the middle of some African country, despite the great work that the Trade Commissioner Services does, despite the great work that Global Affairs Canada does. So I think that on the Canadian side, there's a lot of coordination we need to do. And in a certain sense, the Chamber is one such forum where government, private sector, academia, the African diaspora in Canada can all work together. The one last thing I would say is that I'm increasingly of a strong belief that when Canadian companies are going to an African country, they shouldn't bypass the Canadian diaspora from that country in Canada. So you are a Canadian company from Saskatchewan. You want to go to Zimbabwe. But there are Zimbabwean Canadians. There are thousands of them, and I know many. And they are some of the nicest, most intelligent people. So why don't you find some African Canadian who knows some expertise in that field and work with them before you enter Africa? So don't do this parachute approach. And then when you get there, you're like, okay, I'm here and I'm stuck. So I think that the Chamber really becomes a great forum for all of us to bring these different stakeholders together, because the Prime Minister is definitely supportive of the Africa vision. The leader of the opposition is supportive of the Africa vision. There are major companies like Ivanhoe who are already there. There are academic institutions, McGill, University of Toronto, so many other institutions who are supportive. But I think there's a lack of a coordinative mechanism. So we are all working in different silos, but we don't have a way in which, talking about shared vision, the vision is not clear to the stakeholders, and there's very few times where we can convene. So I think a conference like this is an interesting opportunity for us to listen to the different stakeholders. We just heard Wamkele's vision. We've heard from the Prime Minister. We've heard from Ivanhoe. We've heard from academia. So by the time the conference ends, we are harmonizing our vision.
Brilliant. Thanks so much, Mr. Chair. And I mean, Dr. Mukesha, you've spoken about businesses understanding that their responsibilities, their roles are much more than just the companies, hence your involvement in the African Union, your engagements with governments in a way where other companies might say, aren't you stepping outside of your box? What motivates you to engage? And specifically, you know, it's incredible that this is the second year where it is an African company's office or subsidiary that is backing an event here in Canada that is cross-subsidizing the participation of millions of Canadians, thousands of Canadians, but of course open to everyone to come in to participate. What leads you to believe that that is important, but what are the risks as well for those Canadian leaders or African leaders watching who's saying, look, I'm in business, but I'm hesitant to get involved in the political discussions at risk of being seen as being political or politicizing. It's a question of balance, many say. How do you assess that, Dr. Mukesha?
As you say, it's a question of balance, Gareth. It is indeed a question of balance. But I do believe business can be the truth barometer to politicians. You know, truly speaking, I speak my mind in all the forums of governments in terms of what I think is best for business and what I do believe is best for investors and what I also believe is best for citizens, you know, because if nobody voice out their true feelings about the situation, you are missing an opportunity of fine-tuning some of the problems that our continent face, you know. And I still remember I was heavily criticized when we started a highly mechanized mine methodology. And somebody in government said, are you aware that normally a platinum mine employs 10,000 people? And this so-called Ivan Platts of yours, the Platreef project, will only employ 2,500 people because it's going to be a mechanized mine. And I said, give me a platform where I can address all the ministers of mines and educate them in terms of what does mechanization mean. Everybody talks about the statistics of lost time injury, the fatality in mines. But nobody thought that when you do highly mechanized mine, you're creating the most safe environment in mining. And we put a presentation together and we said, if you really want to see safe mining, this is the mine that we are going to build. Air condition underneath, the highly technological way of doing things. For the simple lack of a better word, it's almost like you have operators on the joystick instead of really having a miner with a hard head where the rock is here and is drilling. Gone are those days. That is old generational way of mining. We know we need to move beyond that. We need to be the trailblazers. We need to show change in terms of the industry progressing. So how are we going to educate our policy makers in the mining sector if we're not sharing the same platform with them? You know, so the industry can talk in terms of the Chamber of Mines and say, yes, mechanization is a good thing. But if the decision makers don't understand, what do you mean by that? You miss the opportunity of influencing the perception of the thinking. And I always refer back to Lewin's model. You know, you do not change an attitude by hammering things. You allow the process to take its place. And in this case, it's almost like you're dealing with an ice cube, you know. If you really want to change the shape of that ice cube, you cannot hammer it and say, I'm changing the shape. You need to allow it to melt, you unfreeze it, and you put it in another container, you refreeze it, and the shape has changed, and you haven't lost any quantity in terms of the content of that ice. So it's the process that we are going through. When you engage with government, you're not engaging with government because, oh, you want to be given first priority, or is it favoritism or anything like that? But you are a change agent that is making the triple P to work, because whether we like it or not, business doesn't exist in isolation. There must be private-public partnership that takes place, and particularly with infrastructure projects as well. You know, I'll make a classic case in South Africa. We have a water plant called Masodi Water Plant, and it's supposed to actually assist mining and communities in terms of supplying water. The project comes to a standstill. simply because the local government had become non-functional. So what do you do as a business leader? You need to service your community. You need to make sure that mining works, because there's no mining without water and without electricity. Do you fold your arms and say, you know what, I'm not going to get involved. This is a government issue. It's local government. It's failing. Therefore, I'm staying out of it. No, you don't do it. You are a corporate citizen. As a corporate citizen, it is your fiduciary duty to make sure that you also get involved in unblocking things that are blocked. You cannot say the municipality that you're actually paying taxes to for it to function. If it fails, you're not going to be involved because, oh, no, I'm business. I operate in my own corner. That operation at own corner mentality is going to have an impact in terms of affecting your business plans as well. So we are unapologetic in terms of being involved in the AU, in terms of being involved in SADC, in terms of being involved in BRICS. We shall be there and we shall fly the flag of businesses there. If other businesses wants to join us, by all means.
Dr. Patricia Makesha, thank you so much, Mr. Sebastian Spiogabra. A wonderful note on which to end. And truly thank you for the leadership for each of you in this chamber, the fact that we are open and that we've brought together, as Mr. Spiogabra alluded to, people across various divides, partisan, business, other types of backgrounds. And so it's my great pleasure to once again, in conjunction, no doubt, with wide applause virtually from all across the continent and Canada, to convey my sincerest thanks and congratulations for your role in the Canada-Africa trade and investment relationship.
Canada can play a vital role in Africa's economic restart. It is important, as both Canada and Africa recover from COVID-19, that we are committed partners. During the recent election, Canada's Conservatives committed to negotiating new agreements with free countries that safeguard workers' rights and the environment. Our approach will greatly benefit Africa. This includes implementing a strategy for long-term engagement based on partnership and mutual interest. Conservatives have voiced our interest in engaging in the African Continental Free Trade Agreement, particularly in infrastructure, energy, technology, minerals, and food security partnerships. It is important to Canada's Conservatives for our country to establish a long-term strategic outlook with key African nations. As we address challenges and build solutions together, our nations will thrive. Thank you, and I hope everyone enjoys the event.
Thank you very much. A message from Ottawa. I want to thank the Prime Minister. I want to thank the ministers, particularly Minister Mary Ng. Incredible support for the African trade agenda and the African Continental Free Trade Area. That was a submission, some remarks. Thank you to the Leader of Opposition for also expressing that support. Indeed, as you say, Dr. Makesha, and Mr. Sebastian Spiogabra, it's about bringing everyone together and ensuring that those who buy into the vision, that we work together and we collaborate. We've got ministerial remarks as well on the continent. We'll be taking our opportunities throughout the program to bring in some of those voices. Apologies to those who we won't get to. Of course, time is limited, but please keep those remarks coming in. We do want to offer the floor and the platform to you at future events. But wonderful to see support again across the aisle in industries and business and public policy for the African Continental Free Trade Agreement. And again, we're proud as a chamber to welcome all together to have these discussions and dialogue. So far, it has been immensely productive. Well, of course, this doesn't happen without our generous sponsors and supporters. And there's no doubt that the virtual platform with which thousands have been able to register and enjoy this event, it's made possible by SIX. I want to thank Daniel Baranking for his leadership. He is the founder of this company, an amazing tech startup that is rapidly growing right here out of Toronto, and a firm that has been backing the chamber in terms of digitization from even prior to COVID, when no doubt this form of conferencing became a necessity. And we're proud to work with you, Daniel, going forward, because no doubt that as we get together in the hundreds and thousands in person in the years to come, even the months to come, if possible, we'll be using this sort of technology. And you would like to address us today on a specific topic that you were relaying to me earlier this morning. The question of why you're mobilizing retail investors worldwide to invest into African projects. Because, of course, retail investors are an important part of capital, in addition to those institutional investors from whom we're hearing from a little later today. So, Mr. Daniel Barankin, CEO and founder of SIX from right here in Canada, who has been at the forefront among his generation in advancing to Canadian businesses and future leaders the Africa story. It's my great pleasure to hand over to you.
Thank you for that wonderful introduction. Before I begin, I'd like to extend a few words of thanks. First, I'd like to thank Sebastian Spio-Garbra, the outgoing chair of the board of the Canada-Africa Chamber of Business. And I'd like to also thank Gareth Bloor, the president of the Canada-Africa Chamber of Business, for the great assembly of speakers at this year's Africa Accelerating Conference, including Canada's incumbent Prime Minister Trudeau, as well as former Republic of South Africa President Motlanthe. Several governments and governmental agencies are represented in this year's conference, along with various speakers from private industry and nonprofit organizations, as we explore topics such as mobility, trade, infrastructure, logistics, environmental and socio-economic well-being, as we chart a path forward to enable the African restart for a new global growth engine through trade and partnerships. These topics have weight, the speakers have influence, and it is an honor and privilege to enable these conversations to happen out in the open as people from all around the world participate in this historic event for free from their laptops, tablets, and mobile devices here on Six.com. Nearly a decade ago, we set out to build Six out of a hypothesis. We theorized that there could be a market-based solution to address the problem of social mobility and economic inequality. In particular, we believed that we could improve the world by creating an economic incentive for the people and companies with influence and power to build in public, out in the open, and to allow everyone to participate alongside them in the process. Our belief was that by making the process of building companies transparent, people could learn from each other about how to unlock their own economic potential, whether that was by investing in the companies building in public or by building something in public through Six of their own. As people, we learn from each other, and there is tremendous value in watching and seeing how others succeed and integrating that success and learning into our own lives. Our flagship product, Six.com, combines the power of community and technology by making it easy for anyone to attend, host, and market virtual investment summits. Virtual investment summits, such as this one hosting Africa Accelerating 2021, are live interactive events delivered over the internet by video and are specifically designed around the unique capital markets needs of investors, analysts, and companies. Virtual investment summits are powerful because they function as time-based events that bring people together at the exact moment when decisions are being made. We're in a virtual investment summit on Six.com right now, and as an attendee, you have access to world leaders, to titans of industry, and to aspiring and budding entrepreneurs, along with investors ranging from hobbyist, retail, accredited, and institutional investors as well. In a phrase, Six is a place where capital and ideas meet. More than 300 events have been hosted on Six.com since February 2020, and more than 100,000 people have participated in some material sense, whether it was by visiting the website and opening an account, registering for an event, or attending live. The virtual investment summits we host on Six are global, with companies and operations all around the world represented and accessible to all. Investors on Six.com are connected to projects and entrepreneurs in Burkina Faso, in Ghana, in Namibia, in Zambia, and in many, many other countries throughout Africa and around the world. The geographic barriers of being far away are becoming less important compared to the character and content of the vision for the future that is being presented. Entrepreneurs of large companies and small ones have an economic incentive through Six.com to become more accessible with their activities because they can speak to large, engaged audiences all at once. This is important because it means that the smallest, least economically significant person in that audience gets the same access through Six.com as a much larger, more economically significant person or firm. Access is everything. When we set out to solve and address the problem of social mobility, what we're imagining was the ability of an individual to improve their socioeconomic status as a result of their actions. And for many people around the world today, the perception is that social mobility is becoming harder and for some impossible to achieve. Here in Canada, young people are struggling to own their home. While the cost of living rises, discontent brews. Similarly, in Africa and around the world, people are feeling disenfranchised as factors outside of their control, such as inflation, make it harder for them to rise in socioeconomic status. Notably, throughout the pandemic, in the past 2 years in particular, as we see the real economy struggle and millions lose their jobs, the stock market soars and continues to soar towards new all-time highs. The gap between people and individual economic outcomes is widening. 6, as an antidote to that, is a place for people to come together and to succeed together. Everyone is welcome, regardless of geographic region, regardless of socioeconomic status. There is no cost to participate. All that matters is your ambition from the future and where you want to go. And it matters much more than where you are from or what economic means you may or may not have. Access, whether it's to the heads of states, such as incumbent Prime Minister Trudeau or former President of South Africa, Motlanthe, or to executives and CEOs or to investors, access matters because it allows for learning, knowledge sharing, and ultimately an opportunity to raise capital or to invest it. And yet, if access is so important to socioeconomic outcomes, to social mobility, to solving and curing the problems of economic inequality, what are the greatest barriers to it? Why don't people have access already? We believe that the single greatest obstacle to access is logistical constraint. There are more than 8 billion people on planet Earth. We don't all live in the same place, and for all of us to get in a room together at the same time would overload any conference venue, any city, any country, any continent. One of the things that's so interesting about hosting Africa Accelerating here on 6.com is that there are no limits to who can access the content and the speakers and attend and participate in the dialogue. Everyone is invited, and with more than 7.1 billion mobile phone users around the world, we have space for everyone to attend. Our ambition is that in the future, all discussions, whether they are political, commercial, or material for other reasons, will be accessible for free here on 6.com as we come together and participate in building the future. But this dream of shared prosperity and trade is threatened. Around the world today, people are becoming more and more disenfranchised and discontent as a result of no fault of their own. Inflation is eating away at their savings, while increasing the cost of living as salaries are absorbed in rent and gas and food. And as the cost of living rises, the ability for ordinary people to take economic risks declines, whether that risk is investing or starting companies or some combination of both. In order for social mobility to prosper, innovation is required, and innovation requires courage. The courage to put capital at risk, the courage to go build companies, the courage to join companies, the courage to invest. And whether you are an operator or an investor, in order for the promise of social mobility to be fulfilled in Africa and beyond, we will need courage in a context where fear and anger is rampant throughout the world. We will need courage when people feel that the dream of social mobility is becoming harder to grasp. We will need that courage in a time when in every country, in every continent, populism is rising and people are discontent and angry. And as the question looms, what has trade done for them? As people question the merits of capitalism, of trade, of cooperation, and even of peace. Africa Accelerating 2021, hosted by 6.com, represents an alternative glimpse into the future. A world where every discussion, political and commercial, happens online, in full view and access of everyone else, transparently and for free. A world where geographic barriers and boundaries are less important than the content of your character and the quality of your ideas. By aggregating the global supply and demand for ideas and capital here on 6.com, through events like Africa Accelerating 2021, we are empowering more people to improve their socioeconomic status through their actions, either by investing or raising capital or both. 6 is where capital and ideas meet, and it is my great honor to host you all on our platform today. Together, we are demonstrating the best of politics, the best of commerce, as we usher in an open, transparent system where everyone is welcome, where trade flows freely, and where people, through their positive contributions to each other, prosper. Thank you. I'm Daniel Barronkin, the CEO of 6. My email address is daniel@6.com. Please feel free to contact me if you want to get involved in unlocking social mobility on a global scale by empowering anyone from anywhere to invest in anything. Thank you so much for your time and enjoy the rest of the conference hosted here on six.com.
Daniel, thank you so much. And you're also the youngest ever director of the Canada-Africa Chamber of Business. If I'm not mistaken, Mr. Chair, I think you were 21, if not maybe 20. And of course, you were well into running this incredible company from startup to scale up. Congratulations and thank you for enabling the Canada-Africa agenda the way you do. Dignitaries, ladies and gentlemen, business leaders, we are now going into 2 parallel sessions before we return to the main stage at 12 o'clock Toronto time, 6 p.m. in Johannesburg and elsewhere. And it's got great pleasure to moderate the breakaway session, which will be taking place both virtually and in person as a breakaway event. And that is with Export Development Canada. We know that for Canadian businesses, they're partners of choice. There was a recent headline in the National Post that said, "Forget Asia. The prospects for Canadian companies lie in Africa." I'm paraphrasing there, but it shows the incredible influence and the incredible messaging that is coming across in driving the narrative. So we've got the leadership at EDC on standby, ready to begin our next session. From the main stage, our esteemed chair, Mr. Sebastian Spiegel-Gabra, will be leading the private equity discussions and the policy discussions over the next hour and a half, and he'll be introducing our first panel. Thank you so much. To those joining in the EDC session, you have your links. They've been sent to you individually or should be appearing either on screen if you have registered for that session. And if you need any assistance, do feel free to respond to the email that you've got on hand. A warm welcome for the main stage panel to Mr. Sebastian Spiegel-Gabra. In just a minute, I'll be seeing all of you, the exporting companies in the EDC parallel room. Thanks so much.
ATI is a proud member of the Chamber, and Deepak Dev brings over 20 years of global experience in banking, capital markets, and private finance. He has served in senior positions at GE Capital, EDC, Barclays Investment, and founded a Riverside Advisory. He joined ATI's existing 4-member management team. In his new role, ATI created the role to strengthen its risk management functions at the back of great growth. ATI's preliminary results over the last few years have shown that the institution has grown to have an exposure of over $6.4 billion and an equity of over $350 million, a 34% increase. Without any doubt, ATI remains a very important institution facilitating trade and investment in Africa.
Good day to all of you watching our panel from across the world. I have the honor to have a chance to glean some insight on behalf of all of us from 2 experts on what the preconditions would be to attract greater volumes of commercial capital from institutional investors into African markets. As the Chief Risk Officer of the Africa Trade Insurance Agency, I oversee the risk management of a $6.5 billion balance sheet supporting capital markets, derivatives, FDI, project and trade finance in African markets. We play an important role in protecting capital, but ultimately, what drives the supply of that capital? We have all heard from persons as distinguished as President Adesina earlier of the African Development Bank that Africa's capital needs now include the development of a market for money. For example, the Nairobi Securities Exchange now has a derivatives trading platform, and the Kenyan government recently announced the setup of the Nairobi International Financial Center to augment peers in the region such as Mauritius and South Africa. In line with all of this, our panelists are both subject matter experts but have also been on the sharp edge where investing tools carve a niche in economic systems and financial markets. Madame Franny Lottier is known to many of us in the region's development financial institutions as both a distinguished academic who has also been a skilled executive in roles at the World Bank Group, and then she later took on the challenge of being Chief Operating Officer at the African Development Bank, the TDB Bank, and is currently CEO of Southbridge Investments. Andrew Branian has had a glittering career in Canadian financial services, starting with several years at the Bank of Canada before rising to become Executive Vice President and Chief Market Risk Officer, and after that, Group Treasurer at the Scotiabank Group, an organization which has close to a $780 billion deposit base alone. He's now the managing partner of Branian Harper Advisory. So, perhaps we could start out with Madam Freni answering a couple of questions. Madam Freni, could you describe some of the innovation you have observed on the ground to strengthen and deepen the management, regulation, and legal framework in selected markets to help attract private capital, private international capital from institutions to Africa? We know such activities are often supported by the World Bank Group, the IFC, African Development Bank, or our partners in the Canadian government and the UN Economic Commission on Africa.
Thank you very much, Mr. Deep. It's a pleasure to be here. I will give 5 examples. The first one is capital markets development. The World Bank Group, particularly through the IFC, has done a lot capital market, legal systems, and improve the regulatory environments. And a good example of the impact of that intervention is the merger of the capital markets of Rwanda, Uganda, and Tanzania, which has given a huge boost to the opportunity to use local capital to finance development. The second example is the African Legal Support Facility that is hosted by the African Development Bank. This is a facility that supports African governments in complex commercial negotiations so that they can speed up agreements with the private sector or for complex debt structures. And this has been operating since 2010 and has many good examples across Africa. The third one is the work that has been done for financial services deepening. A good example here is what was done for Diamond Bank PLC to extend their capacity to bank the unbanked, particularly women. And this is work that was supported to bring in fintech solutions, to get the revolution in bringing in digital solutions to the financial and banker. And there you have the support from FSD Africa and along with entities like Women's World Banking. The fourth example are the forums that are brought to bring investors, whether they're public or private. And here you have the Africa Investment Forum, you have the CEO Forum that's done by Jeune Afrique, and you have the World Economic Forum Africa that all bring together these dialogues and conversations at a high level. And then finally, in terms of removing barriers, there are a lot of opportunities that have been brought into the market. For example, in dealing with risk, guarantee solutions like the African Guarantee Facility, in providing insurance, such as the Africa Trade Insurance, and of course on the currency hedging side, where you have entities like TCX, which are funded by more than 22 different investing entities to provide hedging against currency risks. So these are 5 examples to respond to your question.
A follow-up question would be, if from given your expertise in the area, could you draw us a line from how these sort of financial market innovations also drive what we would think of as real economy solutions, particularly employment and productivity?
Thank you very much for the second question. I think there are a lot of opportunities to attract market investments and have them then deliver jobs, deliver productivity, and also have an impact on trade. I'm going to give some examples. So on the job side, when you bring market solutions and foreign direct investments or investments in general, it helps to create jobs that first ensure business continuity. And this has been very important, particularly during COVID, where a lot of the investment that came into Africa went to support existing jobs and maintain business continuity. But then, of course, in normal times, non-pandemic times, those investments generate new jobs and they create opportunities for innovation and even different types of jobs that didn't exist in the market before. On the productivity front, I think here's where investment really delivers tremendous results on productivity. First, labor productivity. When you bring in capital, it deepens the opportunity to use previously invested infrastructure, for example, or other capital assets, and that raises the labor productivity. Expansion of productive capacity is also very important because productive capacity tends to be lumpy. So those investments, when they come in, they also generate important productivity improvements. And then finally, when you look at urbanization, and the majority of countries in Africa are urbanizing at a very high rate, where you have concentrations of educated people in big cities, their creative ideas, their consumer-driven innovation, and their demand are served very well to get productivity improvements, such as comes in markets. And then finally, which is another critical element, multi-factor productivity improvement and growth. For the trade side, investments are very important for trade, and particularly at the moment, Africa has the highest rate of investments of all the markets. And because of the continental free trade area, that means there are even more opportunities to invest. So I give some examples. In the intra-African trade space, greenfield investment instruments, and that generates the important infrastructure, whether it's for energy or for transport, to create trade between countries. A good example here is the Africa Green Corporation Company, which is a Zambia-based energy company that does renewable energy through a grid to Eastern Africa. The other example is e-commerce. Again, with the continental free trade area, e-commerce can come and support entire supply chains. You have the example of Togo, which was able to crowd in a private investment from Arise and Olam to build on the cotton value chain, to go all the way from producing cotton to making textiles to making circular economy type solutions can really be very well supported with investment in market-like instruments. I take the example of Twiga Foods in Kenya, which received investment, is now having an impact on entire food and nutrition value chain. Or you take the example of textiles that I already mentioned, but which could also generate garments trade. This has been very important during the COVID time, for instance, to make all these protective gear, the PPPs that were so needed, and to transport them across borders in order to meet the demands that were coming from countries that didn't have manufacturing capacity. So I think attracting market instruments is critical for jobs, productivity, and trade.
Andrew, given your expertise in the area and the business development work that you've been doing over the last few years, what is it that you've noticed Canadian investors are usually using as parameters to measure Africa's attractiveness as a financial markets investment opportunity compared to its peers such as Latin America or other Asian countries which might be at a comparable stage of development? A somewhat technical answer, I think, would also be fine.
Well, good morning, and thank you for the question, Deepak. And first, I'd just like to thank the Chamber for the invitation to participate in today's panel and for having the pleasure of speaking to the two of you. You know, it's interesting. Canadian investors traditionally are somewhat risk averse. And if you first talk to them about Africa, what you hear the traditional answers of, well, I'm concerned about political instability. I'm concerned about bureaucracy, rule of law, corruption. The list goes on and on. But for the more astute investors, they're able to parse through those negatives and see the tremendous opportunity that the continent affords them. And you mentioned Latin America, and I very often draw a parallel to a country such as Peru. My former employer was very active in the Pacific Alliance countries of Colombia, Chile, Mexico, and Peru. Why Peru? Well, Peru had a strong central bank. They had good reforms underway at the point in time. Most importantly, they had a up-and-coming middle class, and they were tremendously underbanked. I think banking penetration in Peru was in the low 30%, whereas, of course, in North America, almost everybody has a bank account or has some access there. But, Latin America in of itself has all the same sort of issues that I just mentioned off the top as when people think about Africa. So why the difference? And I think that's where you have to get into a level of detail. Other things we hear about is that, investors struggle to become aware of some of the traditional deals that are available to them. They're concerned about deal size. I think the continent has suffered with some pullback in private equity recently because they're just not able to find the deal size that they typically are interested in. And of course, then you get into more traditional concerns around, market risk, development of financial markets, and Dr. Lautier obviously talked about some of the progress that's being made there. And then obviously into credit risk. At the end of the day, you've got the continent with 54 countries, I believe 4 of which are investment grade. So that is certainly a consideration as people look to invest their money. The other consideration for investors is how does the project get commercialized? So, is there local expertise on the ground that can make a project profitable at the end of the day? And how do we find access to those sorts of people? So those are, some of the considerations that people go through. And maybe, Deepak, if I may, I'd like to talk about some of the things we're trying to do to address that. I've had the privilege of being invited to advise the Africa Foresight Fund, which is a private equity fund being set up to invest in the continent and hoping to draw in institutional investors from Canada, principally pension funds. So why is this different? I think first and foremost, it's about the philosophy of the fund. It recognizes that any investors are actually visitors to the continent. We're there to invest in projects that are going to create local good and help the continent achieve its full potential. But the other thing it offers is an opportunity for people to come in and take advantage of some of the smaller deal sizes that are out there that still offer very good returns of investment. So a pension fund is going to be hard-pressed to think about a $25 or a $50 million investment because they've got so much else that they're considering at the end of the day. By investing in a fund such as this, you can invest and get in and active with smaller size transactions and achieve the returns that you're looking for. It's actually a good stepping stone as well. So traditionally, the pension funds have not been active on the continent. They've been active across the world. And I think the time has come now to consider the opportunities that exist there. And here's an opportunity to take a step, get a feel for what the continent's about, see what type of projects are available, look at the performance, and get comfortable with the investing environment. The other thing that we're trying to do is to bring expertise to the table. So on particular projects, let's try to bring some Canadian expertise that can help with technology, or as the case may be, and then find good local partners to employ people in the countries that we're investing in, again, with the goal of leaving some good behind and leaving a profitable enterprise and helping to really shore up the fabric and the foundation of the continent itself.
Fantastic. That's fantastic work. So, Andrew, just to follow up to that, then, you've talked a bit about what the investors would be looking for and what they'd be concerned about. What about extraneous to the investor's own commercial interests? Are there things such as tax implications or regulations from regulatory bodies in Canada that in some quirky way are actually bottlenecking or hampering Canadian institutional investment in the continent? Is there things that government could be engaged with to perhaps smooth the path to private capital finding its way to Africa? I say this from my own experiences in the UK almost 20 years ago, where there were all these hidden challenges in the regulatory books and tax codes and things like that, and that's where that question comes from.
Frankly, Deepak, I think it's more about awareness and it's education. So I think forums such as the conference that we're all participating in today helps to raise awareness and and bring information to people at hand. When you think about investments, yes, you're focused on risk reward. Whether or not you perceive and whether or not you're right to perceive some aspects of Africa as being risky, then you look for the returns that justify those risk parameters. And then you look for ways to protect against the risks that you're concerned about. So if you're concerned about, foreign exchange convertibility at the end of the day, if you're concerned about political risk or risk of nationalization, as the case may be, then you seek out ways to mitigate that. And Deepak, with your own organization, I think there's a tremendous opportunity there where you're providing insurance against some of those risks, wherein, you buy the insurance and you're still protecting the returns that you're looking to try to achieve. So, it's a work in progress, I think, for sure. I think the important thing for the continent itself is to continue to make progress on the reforms that it's making. And again, I generalize, recognizing there are 54 different countries in the mix. But I think, the free trade agreement is a great step towards collaboration moving forward. And then it's really just about being able to find the projects that are going to actually get traction. I think, there's been a number of projects in the past where, they seem to be high profile, there's a willingness to try to get it done, and for whatever reason, they just slow down, lots of bureaucracy as the case may be, and never actually get off the ground. So you want to be able to find local partners who understand and have the connections in the various countries, who know which projects are important to the country, look for potential co-investment opportunities from the local governments or the pension funds there, and really work hand in hand to try to get these things done. I think the entities such as the African Development Bank, I think have done a great job in terms of promoting the region and facilitating investment. And I think the other thing, again, investors are looking for is, just continued development of the financial infrastructure, finding the instruments that are going to allow them to get the debt financing at the local level that they need to support the projects that they're involved with and work together. End of the day, it's all about finding good partners and moving forward together. I've always been a firm believer that you put all your cards on the table, the good, the bad, and the ugly. And you parse through it, you figure out how to mitigate the risks that you're not comfortable with, and then you find a path forward. If there's a willingness to cooperate and do those sorts of things, I think there's tremendous opportunity for Canadian investors in the African continent, and I look forward to seeing that come to fruition.
That's wonderful. And I'll take that example you just gave and tell you that at the Africa Trade Insurance Agency, we have French banks doing currency derivatives in Africa through us. We have German banks and German and Dutch banks funding water and agribusiness projects that are insured by ourselves. We have Japanese banks supporting structured commodity financing that goes out 5 or 7 years. The only ones really missing at the table are, in fact, regrettably, the large Canadian banks. And that's an area that we really want to go into, because where the banks lead, asset managers, insurers, and fund managers tend to follow. And so we very much look forward to further engagement on that side.
So, Dr. Locha, just apropos some of my comments regarding finding good partners locally to help drive the investment agenda. Based on your experiences and with the African Development Bank and all the other roles that you've played, what would you recommend to people looking for those partners, or what is a good way to try to advance that particular agenda to really get investors interested in investing in Africa?
Well, thank you very much for that question. And I was really listening to your example from Peru and wondering why this cannot happen in Africa, because I worked in Peru also when I was working at the World Bank. I think as an investor, you can come with the that you have learned in other markets, engage with local partners who are all able to bring customized approach entities like the African Bank that is needed. But I've seen great successes when you have that kind of partnership, especially if you have a good advisor on the ground who's able to bring the parties to the example I mentioned, huge taking place during COVID. It was an investor coming to invest in Togo, a very small entire supply chain. And it succeeded because the investor was very keen to get to go ahead. The investor had local knowledge and local partners that they could engage with, and they wanted to do it in a unique way that opens up opportunities not only for themselves in the global market, but also for the country they were investing in. And I think these three ways of working could deliver tremendous value for investors.
Perfect. Thanks, Deepak. Just in conclusion, I think I'd like to come back to my initial point that I think there's a tremendous opportunity for investors on the African continent in general. And it really is about finding partners on the ground who understand what's going on locally, who can really help to affect these projects. And, it all serves to really raise the bar in terms of, the infrastructure and everything else within the continent. It's spending the time and getting across there and meeting with pension funds and meeting with local governments to really understand what their objectives are and what they're trying to achieve, and to get a good sense and a good confidence that the projects that you're focused on are actually going to move forward. So, again, I thank the Chamber for the opportunity to participate in today's panel. I also thank the Chamber for raising the profile and the potential of the Canada-Africa relationship. And I look forward to seeing that build and seeing some successful investments by Canadian institutional investors. So thank you.
Thank you very much, Deepak. It's fantastic forward welcoming him to in Africa, along with other Canadian investors. I think there are great opportunities, and the areas to mitigate risks are also there, including from the innovations that you are bringing in. Chief Risk Officer. So very much for inviting me to this conversation.
Okay. Thank you both to our distinguished panelists, and of course, particularly Madam Freining also for those very kind words at the end. Certainly, the Africa Trade Insurance Agency is an institution that's prepared to support investors and traders with and on the continent. And of course, the Canada-Africa Chamber is always here to help make introductions, to help smooth the path, and to assist in any way where we can to make sure that the Canada-Africa relationship remains as strong as it has always been and goes even further than it does today. Thank you all for listening in, and thank you to both our distinguished panelists for being here today.
Thank you so much, Deepak Dave, and to our wonderful panelists for this excellent session. Coming to you from the breakout session boardroom here in Toronto, I'm Samantha Mandigora, and I'm the head of operations at the Canada-Africa Chamber of Business. Now, one institution tasked with playing a major role financing the continent is the African Development Bank. I'll be asking Solomon Quainer, Vice President of the African Development Bank, a few questions. Solomon Quainer is currently the Vice President for Private Sector, Infrastructure and Industrialization at the African Development Bank, where he started in May 2020. He has over 25 years experience in development finance and investment banking. He is an emerging markets specialist investor with experience investing across banks, infrastructure, energy, manufacturing, agribusiness, and services. He has experience supporting executives and board leadership of corporates in strategy development, key government and private sector partnership relationships. He serves as a trusted advisor at the C-suite with companies across multiple sectors in Africa. To Solomon Quainer, what an incredible career to date. You now have a massive mandate on the African continent. Can you please share some details of your day-to-day roles and responsibilities at the bank?
No, so thank you very much for the question. The African Development Bank, strongly believes in private sector development. And that also means that we have to find, ways to not just deploy our capital, as the African Development Bank, but really mobilize, other investors as well. And so annually, pre-COVID, between the 2016 to 2019 period, we invested over $2 billion a year in private sector, in sectors such as the financial sector, the transport sector, the industrialization sector, agribusiness, telecoms, and also renewable energy. And in all of this, we always look to really mobilize beyond what our balance sheets can provide. And so we're looking to, through syndications and other innovative ways of mobilizing to bring in institutional investors such as pension funds. We're primarily a lending organization, but in addition, we also have a fund of funds private equity business where we've invested. Today our total outstanding investment is about $1.3 billion in 66 different private equity funds. So we're quite experienced in the private equity space, in Africa. In all of this, we are seeking to achieve the Sustainable Development Goals, and to do so, we've prioritized 5 key areas which would tend to be very interesting to international institutional investors. The first is to light up and power Africa. The second is to feed Africa. The third is to industrialize Africa. The fourth is to integrate Africa. And the fifth is to improve the quality of life of all Africans. And in doing so, we create very attractive investment opportunities in areas like infrastructure. We create attractive investment opportunities, in service areas, in industrialization, like in the pharma space. And for me, my part of my role is to really, guide, strategize, and motivate my teams to proactively engage with clients, both globally and clients regionally and locally that are invested in this space. And we come in to actually, not only deploy our capital, but mobilize additional capital, to support, these clients, and also to bring in institutional investors such as those gathered here today. There are some bigger initiatives that we look at that would once again further support private sector development. So, for example, the African Continental Free Trade Area is a key initiative that really expands the markets for various businesses. And so these are examples of what I focus on every day. In terms of trying to enable private sector development, across Africa. The last 2 areas I want to touch on is, private investors or private companies always need the right enabling environment. And we as the African Development Bank engage with governments to create the right enabling environment, whether it's policy reforms, regulatory reforms, legal reforms or institutional reforms. We engage with governments to create the right environment for private sector to thrive. Lastly, and very, particular to, this particular audience, the African Development Bank, working with partners, have established the Africa Investment Forum. And this is a very unique forum that was set up 3 years ago. It's a transactional platform. It creates the opportunity to present and promote transformational projects in Africa. And over the first 2 years, we were able to, develop about $78 billion worth of investor interest in transformational projects, in Africa. And this, these are some of the things that, I focus on overall. To make sure that not only are we supporting private sector development in Africa, but we're mobilizing capital from domestic and also global sources to achieve it.
The African Development Bank is covering a lot of ground. What would you say are the main trends favoring private investment in Africa?
The first key area I would say is that Africa is the most reforming continent in the world. Pre-COVID, based on the global reforms that one has seen in the ease of doing business, Africa was recognized as having contributed to 33% of those reforms in business, in business reforms and regulation. I mean, that goes to show that governments are actually, are biting the bullet, making the right decisions to attract private sector, into their markets. So that's number one. Number two, urbanization is actually expanding, in Africa, and this is creating also a middle-income class, a middle-income bulge, and this is also leading to, the rise in consumer story, and with the increased purchasing power, with, the increased opportunities, in urban environments, this actually creates an investment opportunity in several consumer-related businesses, whether it's pharmaceuticals, whether it's healthcare, whether it's, fast-moving consumer goods. It creates a very attractive opportunity. And notwithstanding COVID, the Africa Rising story actually continues. And we've seen great evidence of that, from the private equity group. I mean, private equity always invests really in growth opportunities. In Africa today, we have 150, private equity fund managers focused on Africa, from almost nothing a decade or two, before. And in a recent survey, actually in 2020, in the COVID period, 45% of global limited partner investors actually indicated that they see Africa in 10 years as being the top destination for investments, both when compared to developed and emerging markets. In addition, 60% of the same, investors surveyed actually indicated that they will be increasing the allocation to Africa in the next 3 years. So I hope this is also a great signal for Canadian investors that the opportunities are quite right in Africa. And with, the 150 private equity fund managers, these are great vehicles to actually invest through to benefit from some of those equity returns. Now, a third area that I'd like to talk about is also the fourth industrial revolution. This is creating leapfrog opportunities, in Africa, both in terms of, greater efficiencies in various businesses, but also, tech opportunities themselves. I mean, we've seen the payment space explode in Africa. We have several unicorns, these are companies valued over $1 billion, out of Nigeria, out of Kenya, out of Egypt as well. This is creating significant opportunities. Now, one huge transformational, a factor that could be a game changer is the African Continental Free Trade Area that essentially makes Africa, a single bloc. This will be the single largest economic bloc in the world, 1.2 billion people, projected to double by 2050, and currently with an aggregated GDP of about $3.4 billion. I mean, this is massive. So there are several of these, factors that actually make Africa the right investment destination, to look at. And working with the African Development Bank, we can be very supportive in helping investors channel, the investment funds, either through the private equity fund managers that, we know, or potentially investing alongside the African Development Bank as well.
The facts are clear, yet we see risk factors still come up and again dominating the narrative. How do you address perceived risk?
I think the main point is perception of risk is not necessarily reality of risk. Moody's Analytics in 2020 did a cumulative 10-year analysis of default rates in the infrastructure asset class. Whether you're looking at just infrastructure or you're looking at project finance, I mean, Africa ranked number 2, in the case of infrastructure, in terms of the lowest default rates. And then in terms of project finance overall, it ranked number 4. And I'm talking about when compared to both developed markets and also emerging markets. So clearly, the reality of risk is not really as high as is perceived. However, for us as an institution dedicated to Africa, we realize that we need to partner with institutional investors in that journey because people are at different stages of understanding the market. So this is where, we have various instruments to mitigate, some of those, political risks. We're able to provide what we call partial risk guarantees, where we counter guarantee government obligations on infrastructure projects. Some of our partner organizations like NIGA can actually cover political risk, through PRI themselves. We're able to provide partial credit guarantees, to actually support bond offerings, as well, into infrastructure projects, or even into some general obligation bonds as well. So the message I want to leave investors with is that for us, we see this as a journey. We will be your partners, along the entire journey. Whether you're looking to come in through a fixed income approach or through an equity approach, we will be great partners to institutional investors from Canada. But the last message is perceived risk is not reality.
Thank you so much, Solomon. The honor is truly ours, and we look forward to welcoming you back again. No doubt your insights are invaluable, especially for pension funds and private players here in Canada. Dignitaries and guests, ladies and gentlemen, stay with us. I'm moving back to the main stage, where in just a minute, the chair of our board will be introducing Mr. Tariq Khan, Director General for Africa in the Government of Canada. This will be followed by a dynamic panel titled The Policy Exchange on Ongoing Canada-Africa Collaborations. See you shortly.
Thank you very much.
Thank you so much again. And again, it's a pleasure to come back to the main stage here in Toronto. We are now going to hear from Tariq Khan, who is the Director General for Africa at Global Affairs. Essentially, he is effectively the senior most government representative in terms of the bureaucracy, in terms of the policy side of the Canadian government looking at Africa. Tariq has served as head of West and Central Africa prior to his appointment, and he's no stranger to this chamber, having addressed us last year prior to his illustrious ascent to the current leadership role in the Government of Canada. We are proud to recognize Global Affairs and a long-standing supporter of programs and a long-standing supporter of this chamber, Tariq Khan. Thank you.
Thanks so much for that kind introduction, Sébastien. Bonjour tout le monde. On behalf of the Government of Canada and in my capacity as Director General for Pan-African Affairs at Global Affairs Canada, I want to thank the Canada-Africa Chamber of Business for bringing us all together for this fantastic event and for inviting me to speak to all of you once again. So before we begin, I would like to acknowledge that I am participating virtually from Ottawa on the traditional and unceded territory of the Algonquin and Anishinaabe people. I believe that those of us who have settled on this generous land have a responsibility to ensure true reconciliation with its Indigenous peoples. So let's remember that in all of our efforts to build an inclusive Canada. Today, on day 3 of Africa Accelerating, we're here to discuss how we can work together to enable the dynamic economies of Africa to recover from COVID and become new engines for global growth. Alors que la croissance économique qui a précédé le nouveau millénaire a été forte et persistante dans toute l'Afrique, il est bien connu que l'activité économique moyenne a fortement chuté depuis, en raison de la baisse des prix des produits de base et d'un déclin de l'engagement mondial. And not to mention the fact that we are witnessing such a significant global economic slowdown due to the pandemic and its impact on Africa. Mais il est essentiel que la croissance de l'Afrique retrouve son élan d'avant le millénaire, et l'une des façons dont cela peut se produire est à travers un plus grand partenariat entre le continent et le Canada. Supporting Africa's growth and prosperity is a priority for us at Global Affairs Canada. We are committed to building and strengthening our partnership. A concrete example is the announcement made by Prime Minister Justin Trudeau last May at the Summit on Financing African Economies that Canada will accelerate its support for the African Development Bank's 7th General Capital Increase to maintain its ability to provide valuable financial assistance to its clients. And you heard from the Prime Minister directly at the beginning of Accelerating Africa this year regarding this government's commitment to enhancing our economic cooperation across the continent. Canada has rich and meaningful relationships, as you know, with many African countries. These are based on mutual trust and accountability and historic links. Our African partners look to Canada for increased economic partnership and investment across the continent, as you know. More investment is critical to providing employment opportunities for the young and fast-growing populations of African nations, and it will create sustainable and steady growth. Let's look at some numbers on Canada-Africa trade. In the past, the total Canadian trade in merchandise with sub-Saharan Africa has been modest, reaching $7.7 billion in 2020. In 2020, Canadian direct investment abroad for all sub-Saharan Africa was $12 billion, while known FDI in Canada from sub-Saharan Africa was $2.5 billion. We have also actively pursued initiatives aimed at promoting trade and investment on the African continent, including increasing the number of trade commissioners on the continent who are there to work with Canadian companies to serve you, as well as to help implementing foreign investment promotion and protection agreements, FIPAs, with several African nations, notably Benin, Burkina Faso, Cameroon, Côte d'Ivoire, Egypt, Guinea, Mali, Senegal, and Tanzania. Our international cooperation programs, our development programs, have also been working to improve the business enabling environment in many countries, including through training, capacity building, support for business-friendly reforms, and more recently, blended finance initiatives in the area of renewable energy. Mais nous pouvons faire mieux pour soutenir la croissance économique en Afrique. Et nous savons que le commerce joue un rôle important à la réalisation des objectifs de développement durable d'ici 2030. With a new government just sworn in, Canada has an opportunity to improve on our approaches and strategy for the Canada-Africa partnership. Canada will continue to look for innovative ways to deepen its relationship with African countries and increase economic cooperation across the region. We'll do this by finding ways to help facilitate increased infrastructure investment, expand partnerships in research and innovation, and help develop new markets and partnerships for Canadian and African businesses. Our goal is to support the rules-based trade and investment environment in Africa and help increase the ability of African countries to ensure that sustainable growth takes place. Canada is committed to helping develop the environment for Canadian businesses operating in Africa, whether it's through continuing policy discussions or advancing pacts such as foreign investment promotion and protection agreements, air transport agreements, and double taxation agreements. Global Affairs Canada, largely through our Trade Commissioner Service, also continues to look for new opportunities in its priority sectors in Africa, including natural resources, agribusiness, education, and infrastructure. Alors que le Canada souhaite accroître son engagement en matière de commerce et d'investissement en Afrique, nous estimons que les institutions africaines joue un rôle de premier plan pour stimuler et faciliter la croissance économique durable en Afrique. Canada sees the African Continental Free Trade Area, the ACFTA, and intra-African trade as a key future driver of African economies. We recognize this. A unified continental market has the potential to improve economic prosperity, stability, and security in the region. It will attract greater investment from and greater engagement with the rest of the world, including Canada. Canada sees the implementation of the agreement to create the ACFTA as a critical step to help the development of value-added sectors and for our own participation ultimately in regional value chains, infrastructure, services such as logistics, education and health, and goods like agricultural products, agro-processing, and clean tech. and this is just to name a few. We know there is much more, and we know there is much more potential that Canadian businesses have to offer. As has been stated numerous times in this conference, supporting the ACFTA is about building for the future. This is why, since 2003, Canada has supported the African Trade Policy Centre at the UN Economic Commission for Africa. We have recently approved $15.2 million in funding over 5 fiscal years to the ATPC to help it support the implementation of the ACFTA, with a particular focus on inclusive trade, gender integration, and climate considerations. The ATPC provides technical assistance to member states on ACFTA negotiations. Through our funding, the Centre is currently supporting Somalia, Tanzania, and Eswatini to develop and implement ACFTA national strategies. On gender, ATPC works with AU member states to collect annual data on indicators and provide gender-related capacity building and advocacy as more countries develop their national strategies. The goal is to ensure that these strategies are gender inclusive. The ATPC is also conducting a strategic environmental assessment of the ACFTA to examine potential entry points and opportunities for climate considerations to be integrated into the wider AFCFTA processes. Please do check out the African Trade Policy Centre. As we continue the fight against COVID-19 across the world, increased cooperation between Canada and African countries is critical for all of our nations to recover, to become more resilient and stronger than ever. As Prime Minister Trudeau mentioned earlier during the conference, Africa's success and recovery is key to our global future. I look forward to continuing to working with the Canada-Africa Chamber of Business. We want to hear from this chamber and its membership, and we value your contributions. This Accelerating Africa 2021 is yet another fine example of the momentum and the energy you are creating to foster this growing relationship. May our dialogue continue, and may this momentum continue. Thank you. Merci.
Thank you again to Director General for Sub-Saharan Africa at Global Affairs Canada, Mr. Tariq Khan. Thank you for all that you've done to support continued trade and engagement and the relationship between Canada and Africa. Now we go to our panel discussion, just dealing with issues of the Africa Continental Free Trade and actually the obstacles, the challenges, and opportunities to investing in Canada. We have in our panel Edith Gingras, Regional Director of Africa and Middle East North Africa at the Parliamentary Center in Canada. We have colleague Akinyi Urarila, Postgraduate Summer Fellow of the Canada-Africa Chamber of Business. And then we have Chris McLean, CEO of Stone Chair Capital. Edith, you honored us last week during the reception with a seminar with the High Commissioners and Ambassadors in Ottawa. And we would like to get a bit more sense about the work of the Parliamentary Center. And then we'll go to our colleague Akinyi to give us a bit more of insights about her findings in terms of the reports and the research she's done on the Africa Continental Free Trade, and obviously to Chris, who is really putting his money where his mouth is, so to speak, who's a veteran investor on the ground in Africa across various sectors, and to give us some business perspective, investing in Africa, some of the challenges, some of the opportunities, and some of the issues that have come up. So maybe we go to Edith first, and then we go to Akinyi. Edith.
Thank you. Bonjour. Thank you to the Canada-Africa Chamber of Business for inviting us. It's our pleasure to participate in the Africa Accelerating 2021 Invest Africa. We're looking forward to exchanging today on this panel. Quickly on the Parliamentary Center, we are a nonpartisan, non-for-profit organization. We were established in 1968, where we provided research at the time for the House of Commons External Affairs Committee. Since then, since 1993, our mandate is more global, so we support parliaments around the world. So as such, we've worked in 120 legislatures around the 70 countries, across 70 countries, might I say. And our projects are on inclusive and effective legislatures, which are key to resolving development challenges, and yes, including trade and economic development. One of the things that we've seen is that as the African Continental Free Trade Area is we found it's an astounding ambition trade pact, and this will have direct impact on many levels of government, businesses, and populations. And for example, we know that parliaments and governments will need to assess for how the agreement will directly impact their trade policies, economic development, their tariffs, business expansions, opportunities, job creation, and of course, directly on their populations. Through all of this, we know that parliaments will also be required to review the trade legislations, develop new economic market integration policies, for example. They'll be asked or required to do research dialogues, to develop new instruments, new guidelines, and legislation to increase, for example, export opportunities and reduction in technical barriers to trade. We also know that we found that parliaments will also want to undertake trade negotiations, investment strategies, intellectual property discussions. They'll be engaging in bilateral and multilateral discussions on issues, and identifying how to make this agreement work for women and be gender sensitive and also very inclusive with the youth. So these are some of the issues that we're able to support, and because we're able to bring, our center is able to bring members of parliaments who specialize in international trade issues in their respective countries, and we're looking to work with different parliaments. We also, as you know, Canada's Parliament also has loads of experience with it, if it's not with the North American Free Trade Agreement, the Trans-Pacific Partnership Agreement, or the EU-Canada Comprehensive Economic Trade Agreement. So this is some of the things that we're doing now. We're providing practical training around mentoring, individual coaching. So we're really excited about this agreement, and we're looking forward to work with the many countries that are interested in dialoguing, developing new policy, changes in legislation, development of mechanisms for oversight, capacity building of their technical and administrative parliamentarian staff. All of this to make sure that the agreements and the strategies that are put into place by Parliament actually respond to the population's needs and the businesses. Thank you.
Thank you, Ms. Gingras. To Akinyi, how do you, what are some sort of the observations, academic observations from your research, which you think sort of complements the topic at hand?
Thank you very much, Mr. Chair. And first of all, I just want to thank the entire team at the Canada-Africa Chamber of Business for the effort that you do to present such opportunities to everyone. Thank you very much for that. So onto what I'm supposed to talk about, based on the report that I had submitted it before to the Chamber. And some of the key findings that I found about the African Continental Free Trade Area, and I would call it CAFTA. So what I found about CAFTA is that it is a single continental market that has the potential to create about $1.3 trillion US, and that is that is going to benefit a population of about 1.2 billion in the continent. So I found that was really a huge amount of effort, economic growth, industrial development, and improvement of standards of living, and consequently also boosting intra-African trade. Those are some of the benefits that are going to flow from having that CAFTA, and which is now operational. And there are several reports or scholarly materials that evidence that document the benefits that flow from a free market agreement. However, you also realize that in as much as these evidences exist, there are also the things that need to be done, the things that need to be done to ensure that that particular agreement or free trade agreement or free trade area actually meets or achieves its objectives. For example, if you look at the African Continental Free Trade Area, the agreement establishing it, and you find that it in article that is in the protocol on trade on the protocol on trading goods, it establishes that it obligates the member states of the agreement to work towards eliminating non-tariff barriers. And some of the findings that I found on that particular provision is that, one, the agreement, in as much as it aims to boost intra-African trade, it is going to achieve. It is going to provide it obligates the member states to provide a mechanism that identifies, categorizes, and eliminates non-tariff barriers, which is commendable. This mechanism it's an online mechanism that has a plugin that automatically translates the language of complaint into the official language of the country receiving the complaint. And the languages that this online mechanism has is, one, it has English, it has French, and it has Portuguese and Arabic. Another advantage that this online mechanism has is that it has an offline tool that one doesn't need to have access to internet for them to access this particular online mechanism, for them to report the non-tariff barriers that they experience while trading within the continent. But I found this problematic in a way, because despite the online tool or mechanism having all those advantages and trying to meet the objective of identifying and eliminating non-tariff barriers, on the flip side, Africa has languages, that almost 2,000 languages in Africa. There are almost 2,000 languages in Africa, spoken languages in Africa. So you find that, and currently, Swahili is one of the major languages spoken in the continent by about 150 million people. But then Swahili is not even among the languages that is not among the languages that online mechanism has. So you find that is quite problematic, because you find that most of the traders within the continent are going to be most of them are illiterate people who might not be very fluent in English, French, Arabic, or Portuguese. And sorry to say, but save for Arabic, the other three languages are imported languages into the continent. So for some people who may not be linguistically exposed to some of these languages, it poses a challenge for that mechanism being an effective tool actually for eliminating non-tariff barriers within the continent. And another challenge that I found with the African Continental Free Trade Area is that Article 13 of Annex 5 of the agreement establishing the African Continental Free Trade Area obligates the member states of the agreement of the CAFTA to prepare national time-bound elimination matrices. But then it stops at that. The problem with this is that it offers no guideline in terms of how are the member states supposed to prepare this national time-bound elimination matrices. It doesn't offer such guidelines. But then I found that the East African community has a very good template, which is actually somewhere it leads towards solving the non-tariff barriers within the region, although it hasn't met all of the set objectives of such elimination. But then it's currently doing something commendable within the East African community, and therefore the continent or the leadership of the African continental free trade area could try to incorporate or even work closely with the leadership of the East African community to try to come up with some of these templates that could actually guide most of these African countries on how to prepare the time plan, because that will actually be provide the specific timelines and goals towards the elimination of non-tariff barriers. And finally, there was the issue of providing the local standard to expanding the jurisdiction of the continent-wide dispute resolution mechanism to also accommodate the private sector. As it stands, the dispute resolution mechanism of the African Continental Free Trade Area is limited to only the member states. However, the problem with that is that history tells us that African countries hardly litigate against one another. So in this case, when you have non-tariff barriers, which are actually one of the most inhibiting factors to trade in Africa, when you have it is inevitable that disputes will arise. But then it is not states that trade; it is the private sector that trades. So when the private sector is eliminated or prevented or excluded from approaching this dispute resolution mechanism at the continental level, it poses a problem, because it will force these private sectors, these private actors to request the national or the hosts or home countries to invoke their diplomatic protection to actually act on their behalf. But this is a very protracted and bureaucratic procedure that it's going to take as long as forever. So to prevent these challenges that come with such diplomatic protections for the private actors, why not expand the jurisdiction of the dispute of the non-tariff barriers and other trade-related disputes to also accommodate the private actors? So those are some of the few remarks that I had, and it was really a wonderful process, researching and just finding out more about the African Continental Free Trade Area. Thank you very much.
Thank you. It's quite interesting listening to your findings and the passionate analysis that you've done. And I think you've hit the many important nails. We are meeting at McCarthy Tetraud's location here, and myself also being a trained lawyer, I really appreciate the points you're making, because at the end of the day, if you have a continental free trade area and a company in Togo is having a dispute with a supplier in Kenya, and there is no way to resolve it in a harmonious way, ultimately the company in Togo would have to go to court somewhere, maybe in Kenya, and get a judgment and then go and try and enforce the judgment, which really comes back to the same point. And most, as you said, most of the trade that happens in Africa across the borders is of an informal nature. A person selling tomatoes from, Uganda into Kenya, somebody carrying shoes from Nigeria into Benin. It's a very informal system. And I think that my experience the last few month and a half working with the Secretariat in Accra is that it would require all of our inputs, the analysis that you've made. I think when I go back, I would forward it to the Chief of Staff and the Secretary General there and see how you might be able to brief them. Because I do agree that till we work out some of these things, the mission, this grand project, could become a white elephant. I mean, we would all be talking about it, but if effectively it becomes a white elephant. So thank you so much for your passion and for your analysis and for your interest in the subject. So I turn to Chris. Chris, having listened to both Edith and our sister Akini, what would you say from your own experience as a Canadian investor in Africa? How, what are some of the challenges? What are some of the opportunities you see there? And what comments generally would you like to make with regards to the Africa Continental Free Trade?
Canada contributed what we could to the process. We can't stop there. We have to stay involved. Our free trade agreements have changed twice, over the years, right? And they're not the same. This free trade agreement on the continent shouldn't be a static document. It needs to be a dynamic document that is moving all the time. And this is where Canada can definitely be a contributor to that process. I think, though, Canada needs to be very focused on what it wants to do. We can't be everything to everybody. We can say we've got a gender priority, we've got an economic growth priority, we've got natural resources, we've got agriculture. Okay, those are all great things, but pick one. Ultimately, when you're dealing with the free trade agreement, there's just way too much to say you're going to deal with all of these different things. From our perspective, it becomes, okay, let's deal with energy. Canada has a long-term history in energy, and it starts with all of the renewable energy and all the hydropower that we have in the eastern provinces. There used to be a time when Manitoba Hydro was a vehicle of change, of inspiration to a lot of utilities in West Africa. Okay, we've got 5 different power pools, for example, in the continent. Why are we not working on how to deal with how we can actually trade power between those that have excess and those that don't? Finance can come in. We're looking for big giant projects for PE and infrastructure. Okay, great. Let's deal with transmission cross-border, but have the Continental Free Trade Agreement be something there that we're involved with so that we can help guide that success. SDG 7, click, done. You want to deal with women through that? Click, done. You want to deal with finance out of Canada? Click, done. Find some way, find some cause that Canada has experience with that we can have an input in. I'm not going to say that our contributions are in vain up to this point as Canadians, but federally, we need to look at it and say, what do we want as Canadians to help support Africans and diaspora that are going across? It's great to have support for entities like the African Development Bank beyond the tee-up of further capital, the rest of it. But people often miss small things, like when the African Development Bank did a $2 billion COVID bond on the London Stock Exchange shortly after COVID hit, 2 months or so after. And that bond was 70% taken by North American and European central banks. We were chasing yield in Africa to support our domestic needs here versus saying, okay, how can we invest in a structure so that the economies can get better, so that, you know, the growth can be there, so that we're going to benefit together. And I'm not saying this from an altruistic point of view. It's just there's a process here that Africa has to be more than, even in the growth that's there, something that we can harvest. It's not natural resources of a different kind now being yield and manpower. We have to find something else to collectively work on out of this process. I'll stop my opining at that.
No, thank you, Chris. Thank you again. Africa is a very intoxicating subject. It tends to bring out the passion, the passion in all of us. You'd very rarely find a panel on Africa where somebody doesn't get very passionate, somebody doesn't start crying, somebody doesn't start shouting, you know. Thank God we don't have too many politicians around here. We would have had a big debate. No, Chris, I think you make a very excellent point, and I think that on both sides we have, earlier this morning, Dr. Patricia Bakesha and I were having a dialogue about leadership. And it seems to me that the problem we are facing on both sides of this issue is leadership, leadership of prioritization. On the CAFTA side and on the African side, what are the three key points of focus? Like you said, for instance, you have the South Africa power pool, you have the East African power pool, you have the West Africans, and we know that without electricity, all these conversations we are having are functionally useless. And so I think that whether it's at the ECA in Addis or at the AFCTA in Accra, the question which is not on the Canadian side, but which is on the side of we the Africans, is to ask ourselves, what is the key priority over the next 3 years, over the next 4? And then a sequencing of what is the second key priority. So it shouldn't be Canada coming to tell Africa, well, we have a priority of X, so we want you to also go and do X. The famous example someone gave me years ago is that, you know, when a lot of major NGOs, and a particular one comes to mind, I don't want to name it, were engaging in Africa in the last decade, malaria was killing more people than, say, HIV/AIDS. But most of the money went into HIV/AIDS and not into malaria. And over the last year, most of the money in the healthcare sector, most of the investments has gone into COVID and not malaria. But so if you look at it from the, you know, African perspective, maybe perhaps our priority would have been malaria first, measles second, HIV third. But from maybe a global perspective, it would be the reverse. So there's this dialectical dialogue which is necessary between both Africa and Canada for us to draw up some priorities. Because you are right, at the end of the day, there's only 24 hours in a day, there's only 365 days in a year, there's only a finite amount of financial resources. And we cannot build a railway, build a water system, build a healthcare system, you know, build manufacturing, build industrialization, all in 1 year or in 2 or 3. So I think you raised some very wonderful points, and I think it really behooves both the African side and definitely also on the Canadian side, from what Director General Tariq Khan said, and we've had messages today, obviously, from the leader of the opposition. We've had a message from the Prime Minister at our opening to come up with, on Canada's side, what are the 2 or 3 key priorities, and then the African side, what are the 2 or 3 key priorities, and it's like a Venn diagram. We would find some commonality between the 2 points, and then we can converge. Otherwise, basically what is tending to happen is that Canada's engagement in Africa is sort of rather scattered, and the impact is not focused. And I think you see this the last year or so when Canada had the opportunity to become a member of the Security Council of the United Nations, and Canada went around Africa trying to canvass for votes. And the Norwegians also went around Africa trying to canvass for votes, and the Norwegians beat the Canadians. Very strange that despite all the money and the goodwill that Canada has, Canada could not still get the majority of African countries to vote for Canada to be a member of the Security Council. So to me, that was a sign that the entire Africa policy of Canada vis-a-vis Africa had to be really overhauled, because if it is not able to achieve a result. So again, thank you so much to Ms. Edith Gingras from the Parliamentary Center. Again, to Akiniyi for your wonderful research, and also to Chris for your passionate interest in Africa and putting your money where your mouth is, so to speak. And it's really a pleasure, and we do hope that these conversations would continue and that this wonderful dialogue would continue to enhance trade, investment, and exchanges between Canada and Africa. So thank you so much, Samantha. I think that we are now going to hear from the minister from Malawi. Is that correct? Thank you so much.
Mr. Gareth Brook, President of the Canada Africa Chamber of Business, Mr. Sharema Motrani, former President of the Republic of South Africa, Mr. Daniel Baraki, CEO of the SIXI, Mr. Pierre Boivin, National Leader of the Africa Group at Makate Tetro. Distinguished ladies and gentlemen, I am deeply honored to make my remarks at this forum, the Africa Accelerating 2021 conference being held virtually today. I would like to thank the organizers, especially the Canada Africa Chamber of Business, the main sponsor, Idaho Mines, the host SIX, and the Makate Chotra for organizing this forum despite the COVID-19 pandemic affecting holding of physical events. It is my sincere hope that we will be able to meet physically in the near future as more countries are opening up. Distinguished ladies and gentlemen, today I would like to share with you some investment and business opportunities that Malawi has on offer. And these opportunities are in the mining and energy sectors. The two sectors have been identified in Malawi's long-term vision called the Malawi 2063 as priority sectors for the country to achieve industrialization. Distinguished ladies and gentlemen, mining in Malawi is an underdeveloped sector, but holds a very great potential to develop the economy and attract a great deal of investors. Currently, the sector accounts for about 1% of our GDP. In 2015, the Geological Survey Department completed an airborne geophysical survey with support from the World Bank, which revealed an abundance of mineral deposits including rare earth minerals, bauxite, uranium, graphite, vermiculite, coal, gemstones, alluvial gold, monazite limestone, phosphates, pyrite, glass sands, dimension stone, and titanium heavy-bearing mineral sands. I encourage interested investors in this forum to access the data, which can be purchased from the Geological Survey Department, and consider investing in Malawi. A number of investors are already taking advantage of the mining opportunities available in Malawi. And a notable example is the Nkango Mines, a Canadian company which is investing in rare earths mining, among other projects, to support the development of the electric vehicles and renewable technologies. Distinguished ladies and gentlemen, in order to cultivate and sustain a conducive environment for growth of investment in this sector, the government of Malawi revived the mining fiscal regime in 2016 and the Mines and Minerals Act in 2018. Investors in the mining sector are granted duty-free and VAT-free importation of mining equipment into the country. And to access the incentives, an investor is required to obtain a mining license from the Ministry of Mines. And furthermore, the Department of Geological Survey has set up a geodata management platform to ease up information access by investors and other stakeholders. Once again, I call upon you to seriously consider investing in the mining sector in Malawi. Distinguished ladies and gentlemen, turning to the energy sector, Malawi continues to witness high demand for energy following increased industrial activities and population growth. The demand will continue to grow owing to expanding manufacturing, mining, and agricultural activities in the medium to long term. And the demand is expected to reach 2,500 megawatts by 2035, while the current generation is only very minimal at 350 megawatts. Currently, most industrial activities depend on hydro, which contributes around 76% to the generation mix. Although hydropower will continue to play a significant role in the sector, the government of Malawi is promoting a balanced mix of renewable energy sources at industry and household levels. The presence of year-round sunlight and strong winds present opportunities to invest in solar and wind energy projects. Several initiatives have been undertaken in the energy sector in order to improve power supply. The Millennium Challenge Corporation of the United States invested $350 million into improving the capacity, efficiency, and stability of the national electricity grid. With the improved transmission capacity, government is promoting a number of hydro, geothermal, solar, wind, and waste-to-energy projects. Some of the projects include the Colombizo hydropower, which needs about $700 million, the Fufu hydropower, which needs $500 million, the Chiweta geothermal plant, which needs an investment of $76 million, and the Blantyre waste-to-energy plant, which needs $180 million. A number of investors are already setting up solar power plants in the country. For instance, the JCM Power, a Canadian company, has completed a 60-megawatt Salima solar power plant and is constructing a second solar power plant in the central part of the country. More investors in solar energy are welcome, and public-private partnerships are encouraged. Investors targeting the energy sector are encouraged to engage the Power Market Limited, the Malawi Investment and Trade Center, the Malawi Energy Regulatory Authority, and the Public-Private Partnerships Commission to take up these available opportunities. Distinguished ladies and gentlemen, in conclusion, I would like to indicate that opportunities exist in other sectors of the economy as well, including agriculture, tourism, and manufacturing. Market access opportunities are also quite wide-ranging, from bilateral, regional, and multilateral trade agreements. Investors interested in all these sectors should contact the Malawi Investment and Trade Center on www.mitc.mw. Let me go again. www.mitc.mw, which operates as a one-stop service center for investors to get more information. Through the same website, you will also be able to access our compendium of all bankable projects, which will be of interest to all of you. I thank you, all of you, for your attention. Thank you.
Well, thank you very much, Minister, and an absolute pleasure to be back with you. For those at the Export Development Canada session, thank you so much. It was an absolute honor engaging with each of you, as well as the panelists, Mr. Spio Gabra, and to the team here at the main stage and to the live audience. I'm sorry I missed that session, but for everybody who was in a session and wanted to be at the other, make no mistake, the recordings will be available shortly and you'll be able to enjoy both. Well, it's my great privilege to now, at exactly 12 o'clock, welcome the Assistant Deputy Minister for the formal closing remarks of Africa Accelerating 2021. I cannot believe that we have reached the end of 3 days after months of planning and years of leadership, as we know, 28 years of the Chamber in just a matter of months. So, Assistant Deputy Minister, I had the distinct honor of meeting you just a few days ago in Ottawa, where you serve as Sub-Saharan Africa branch at Global Affairs Canada. Your experience includes the Cabinet in legislation and House planning at the Privy Council Office of Canada, where you were Assistant Secretary. You've also served as Deputy Assistant Deputy Minister for Public Law and Legislative Services at the Department of Justice, and have held other roles, including Deputy Director of the Crimes Against Humanity and War Crimes section, and at the Department of Justice, you were also counsel at the Human Rights Law section. You come from McGill University, an institution from which we have an illustrious relationship, where you graduated in law and also in social work. It is an absolute pleasure to welcome you and to thank you for your commitment to the continent. We wish you everything of the best in the years ahead for your role, and we look forward to an ongoing partnership. Our Assistant Deputy Minister for Sub-Saharan Africa in the Government of Canada, Ms. Malakana.
Thank you so much, Gareth, and hello, everyone. Bonjour tout le monde. Thank you to Gareth Bloor and his team at the Canada-Africa Chamber of Business for bringing us all together for this great event. I am grateful for the opportunity to speak to the business leaders and government representatives who are working so hard to grow ties between Canada and Africa. Before I go any further, I would like to acknowledge that I am participating virtually from Ottawa on the traditional and unceded territory of the Algonquin and Anishinaabe people. Over the past 3 days, you have had the opportunity to discuss key priorities and the actions needed for an African restart. You've talked about the importance of mobility, trade, and climate change, and you've discussed why and how we should strengthen collaboration and partnerships. These discussions embody Canada's commitment to strengthen our relationship with the nations of Africa. La relation entre le Canada et l'Afrique est d'une importance cruciale pour les Canadiennes et les Canadiens. Et à un moment charnière où nous continuons d'avancer vers une période post-COVID-19, il ne fait aucun doute que la pandémie continue de créer de l'incertitude et que de nombreuses entreprises, tant au Canada qu'en Afrique, continuent de faire face à des défis sur plusieurs fronts. This is why collaboration between Canada and African nations is perhaps even more essential than before. Indeed, it is crucial that we continue to foster relationships that pave the way for a successful economic future for everyone, both in Canada and in African nations. As our Prime Minister Justin Trudeau has said, Canada and the nations of Africa have a lot in common. Whether it's our shared dedication to democracy, advancing gender equality, or fighting climate change, the opportunities for Canada and Africa to work together are there. And the story we need to tell is this. Canada needs Africa. With Africa home to some of the fastest growing economies in the world and a young and fast growing population, the continent offers significant opportunities for Canadian companies to expand their reach internationally. Canadian businesses want to grow their exports and diversify trade relations with new and growing markets, such as Côte d'Ivoire and Kenya. This is why our Trade Commissioner Service, or TCS, currently has 9 senior trade commissioners working in sub-Saharan Africa, plus 36 locally engaged trade commissioners serving 48 markets. The TCS brings expert market knowledge, local contacts, and on-the-ground support to Canadian businesses to help them find and capitalize on international business opportunities. Canada also wants to support African nations as they grow back stronger and better in a post-COVID-19 world. We are doing this in 2 ways. The first is by continuing to encourage and support investment in the many dynamic economies of Africa. And the second is by supporting African nations on the pathways to sustainable and inclusive economic growth. Tout comme le Canada a besoin de l'Afrique, l'Afrique a aussi besoin du Canada. Le Canada est un partenaire de longue date du continent et appuie la vision de l'Union africaine d'une Afrique intégrée, prospère et pacifique. Faire affaire avec le Canada signifie que vous pouvez compter sur notre expertise, notre talent, et nos pratiques d'affaires responsables. Canada also continues to support the establishment of the African Continental Free Trade Area, or AFCFTA. We do so through contributions to the African Trade Policy Centre at the UN Economic Commission for Africa. Canada believes in the potential of the AFCFTA and its ability to foster regional economic integration. With all this in mind, you can be sure that Canada will continue to build on our close partnerships with African countries, strengthening our economic relationships and deepening our people-to-people ties. In this spirit, we look forward to continuing to work with this chamber and its partnership. Thank you. Merci.
Thank you so very much, Assistant Deputy Minister. An absolute pleasure to have met you and to have you close the conference today with those remarks. Well, we wouldn't be here if it weren't for a number of incredible supporters and sponsors that we've had backing us for such a long time. And you can see some of those listed right here to the left and right, both country members and sponsors of the Chamber, specific Africa Accelerating sponsors, and you'll see many of these entities are one and the same. So thank you first and foremost to Dr. Patricia Makesha and Ivanhoe Mines for the underwriting this event as lead sponsor and partner, to 6, B2 Gold, McCarthy Tetra, EDC, where we've been for the last 3 days and many days prior planning for hosting us. You know, this venue has not just been what each of you at home and at the office remotely have seen virtually, but we've had breakaway rooms, meeting sessions, private sessions, and of course the public programming. So thank you so much for that. Mine Africa, Ethiopian Airlines, Hatch, Dundee Precious Metals, Orsenko, Process Research, Ortec, the APO Media Group, and of course Global Affairs Canada, from whom we just heard now. Well, it is my great pleasure to invite an individual to say a few words from his very own home base here in Toronto, a renowned global lawyer and a leader at McCarthy Tetra. Dai, you've been with us and incredibly gracious. And I know we just sprung this on you right now, but you managed to get here in time from the continent for the start of this conference. And I really just would love to give the floor to you. Thank you for your support. You're also a former director of the Canada-Africa Chamber, and a few people have said maybe he'll come back and join us again now that you're grounded right here. Thank you so much, sir. Great to have you.
Well, thank you, Gareth, for this kind introduction. I'd like to congratulate the Canada-Africa Chamber for this very successful conference. I'd like to congratulate Gareth and Sebastian for their leadership, as well as the rest of the team. I'd like to also congratulate all the participants in this conference. I was amazed by the quality of the participants and of the discussion. And we at McCarthy's were extremely pleased to host this event and look forward to hosting many more in the future. We look forward to our continued strengthening relationship between Africa and Canada, and think that the Canada-Africa Chamber is a vehicle which will allow for this relationship to continue to grow. Thank you again, everybody, for participating, and congratulations again. Thanks, bye.
Well, thank you so much, and I'm so privileged to join as much as we can do the socially distancing. Some of the key people who've been with us today. To my right, Mr. Jacques Numtumbe, Vice President of the Canada-Africa Chamber. Samantha Mandigora for her incredible leadership making this event happen. Heading operations, appointed just last month by the board. Dr. Patricia Makesha, or Sister Pat, as we all know you. Thank you for underwriting this event and for your leadership. Mr. Sebastian Spiogabra, we miss you. We know you're a special envoy on the continent, but you've done incredible work, and it's so good to have you back just a few weeks into your new term of office based out of Accra. Thank you so much, Mr. Chair. And finally, I'd like to say thank you so much to Dai. It's been a pleasure getting to know you over the last few days. And if I may, the final word, I truly believe, goes to our chair of the board, Mr. Sebastian Spiogabra. I would not be here today. I would not have ever imagined it possible to have the support and the commitment of one single person. And yet, Mr. Chair, you've been that colleague, that friend, that mentor. And at risk of getting a bit too carried away, I can only tell you an immense thank you for being such a brother, a colleague, and a champion for this relationship. Mr. Chair, thank you so much.
Thank you. Thank you.
We'll be seeing you all next year, both on the African continent and here in Canada. I'm very pleased that during the side discussions that took place at this conference, we're back in person with a main stage venue on the African continent next year. That is a return to pre-COVID. Just last year, before the pandemic meant there was a shutdown for many of us, we had 5 events on the African continent. The last one was that visit of the Prime Minister over to Addis Ababa and onward to Senegal. And we're very excited to be back. And I want to thank Sister Pat, because her leadership has ensured that our main stage next year is going to be live from the African continent, specifically in South Africa. So we're very excited for that. And Sister Pat, if there's one last closing word, I think I'm going to allocate that to you, even if it is just to say thank you, because we could not be here without the leadership of people like you. So thank you so much.
Thanks so much for everybody who participated. You could have chosen to be anywhere in the world, but you chose to spend the most progressive and transformative 3 days with us. Thank you. Much appreciated for your leadership, Gareth. We really appreciate you. Sebastian, thank you for the leadership. Much appreciated.
And thank you so much, Sister Pat. And to the team at 6 who've been with us remotely from all over Canada, making sure that everything works so perfectly. Very big thank you from all of us, and have a wonderful rest of your day. And to everyone across the continent, be assured that this is always the start of a conversation that continues. And so we expect to have as many events leading up to the next Africa Accelerating as we had, with about 50 events in the lead up to this. It's a critical agenda. Thank you so much for joining us. And we look forward to seeing you, not next year just for Africa Accelerating, but of course, probably next week or the week after as we do our intermittent programming. Goodbye to everyone on the continent, and a very good afternoon to everyone here in Canada. See you soon.